Good morning, good morning, good morning, good morning, good morning, everybody. It is a happy Sunday morning. Super excited to be here. You'll recognize there's a little bit less of me here than there usually is. Had to cut this down so the baby would let me hold her again. Dad, get that out of my face. So, cleaned up, trimmed up, ready for some presentations at work this week as well, where they had to see me. So yeah, it is what it is. It's happening. So super excited to have you guys here today and get through a bunch of different things that we wanted to kind of run through today. One of the things that really interested me a lot was I've been watching the Ivy Zellman podcast on or not live stream episode on Bigger Pockets. Some of what she says I agree with. Some of what she says I completely disagree with. But I think one of the things that was really interesting that I think she talked the most about was talking about really what I think she's angling at is syndications. I think where she's talking about 30-year fixed rate debt and people renting out those houses and such. I think what's really interesting is, she's talking a lot about how, that part of the market, there's a lot of inventory that's going to come online there. So I don't know. I don't know. We'll see. We'll see what's going to happen. I mean, no one has a crystal ball, but I can tell you, necessarily not part of my numbers is demographics. Although what's really interesting about demographics in my market is that New Hampshire was actually number 2 in the country for increased population per capita during the Great Health Event is what I think we're supposed to call that. So anyway, I thought that was interesting. I'm going to watch the rest of it. I've watched probably 40 minutes of it so far. She has a ton of data. The one issue that I always have with analysts is that analysts are analysts. They only analyze. They don't actually do anything. And so they're not like, they talk to people that are hands-on, but just like they talk about being disconnected from the transaction, there's probably nobody more disconnected from a transaction than a company like Ivy Zellman. I mean, they're analysts. All they do is analyze and they talk to people, but they're not actually doing any of the work themselves. So everything is based on what somebody is telling them. I see what we're seeing actually in effect based on doing the work, doing deals on a daily basis, and recognizing how quickly things sell, how quickly things rent. None of those things am I seeing in my market changing at all. Things have remained crazy busy. I haven't put a unit on the market in over a year. I haven't put a unit on the market. Maybe a couple units on the market, but I mean, normally we'd have dozens of units on the market within the course of a year. Let's call it less than 5. It's a small number. It's a small number. So good morning, everybody. For those of you who don't know, I am the lumberjack landlord, although slightly less beardy. Here to talk about real estate, answer your questions, have some fun. This isn't rocket science. It's just a lot of math. But talk about how you achieve financial freedom like I did. Been in real estate for over 20 years, over 100 units. I own them. I have mortgages on them, but they're all mine. I don't syndicate. I don't have partners in any of them other than my lovely Mrs. Lumberjack wife. But not a partner on paperwork. So anyway, let's jump into some hellos and some good mornings. Super excited to be here. Have you guys here with me today and just talk about a lot of stuff. Anywho, Dion talk financial freedom, 45,614. Dion, you have no idea how many times that came up in conversation this week. 45,614. That came up a lot this week. As in, I don't know if I'll make it there. So for those of you who don't know, 45,614, my good friend Zuber over on One Rental at a Time, he retired at 45,615. He retired at 45 years, 6 months, and 15 days old. And so my 45-6-14, I think, is like January 4th or 5th of 2023. And so one of the fun things that we joke about is that I'll retire younger than he did. And so we'll see. We'll see what happens. But yeah, we're only a month into the year and I'm tired already. So we'll see. We'll see what comes of that. But yeah, 45-6-14. Ain't that the truth, Dion? And Dion will work forever because he loves his job. See, didn't even need to be here to say that. So yeah, good morning. Janet Santiago, good morning. How is the baby? She's great. Thank you very much. She was down for a 5-day treatment last week. Excuse me. And she is down tomorrow for tests or for labs. And then based on her labs, she'll get infusions of blood or platelets. And then we'll see how she goes. And then if that goes well, then she won't have to go back until the next week for treatment again, hopefully. So we'll see. So she's doing well. Thank you for asking. Janet was overseas. I remember that. Surprised by how many Americans are moving to Ecuador. Oh yeah. Lots of people trying to get out of the country based on cost of living. So makes sense. I have the following question for you. You and Michael have been talking about recession this week. Yep. What would you expect in recession? Your point of view on real estate. Do interest rates go up or down after a recession? So usually interest rates are up. Usually because you're going to have to do interest rates going up because of inflation. The recession will mean higher unemployment. And generally speaking, things will slow down. So how I believe that compares to real estate is I believe that transactions as rates increase transactions will drastically decrease over the coming months. James Bullard, who's one of the Fed chairs, actually said that he expects, I think he said something like 100 basis points by July. That's a lot. That's a lot. That would wake the market up. But there's only 3 meetings between now and July. And so Mike and I were talking about how the fact that it might be, 50-point rate increase, 50 basis points, and then 25 and 25. The market could get shocked and they could do 75. That's actually on the table now and being talked about. Imagine rates going up, stock market takes a tumble that day. So for me, I don't look so closely at those things because I think that you can't control them and no one knows what's coming. So even though I give my opinion on what I think might be coming, it's all about what I'm doing, what my action is. So my actions over the last year were to refinance as much of my debt to 30-year fixed rate debt as I possibly could, which I did. It was to refi out at a 70% loan to value on anything in my portfolio, which I did. I still have a few left, but they have extenuating circumstances, like things that we're waiting on an approval for, things that we're waiting on a subdivision approval for, things that we're waiting on an ADU lot approval for, all of that sort of stuff. And so we started that process quite some time ago. So, excuse me. And then Eliana got diagnosed. And so a lot of that stuff, as you can imagine, went to the back burner. So we have a very small, excuse me. I'm not nearly as polite as Dion. He likes to mute his mic. I don't mute my mic for some reason, but I'll start doing that. So what you'll see, so what we've done is levered up 70% loan to value, made sure that all of those properties still cash flow at least 10%. A number of them are still in the 20% range, return on capital and cash flow. So our cash flow numbers are still fantastic. Meanwhile, we will basically put into our buying fund, we'll put about well into the significant 7 figures. So past the 7-figure mark, we will put into, and again, this is based on buy and hold real estate for the last 20 years. Some of those mortgages, this is the first time I've refied them. Some of them, it's the second time I've refied them, but a lot of them are coming off of the books from after having been mortgages for 8 years, 9 years, excuse me, because the rate had to really be significant. And I was waiting for the right product and the right bank, the right time, the right relationship. to then start to do those. So where we are right now is a lot of my 5-year commercial debt I've moved to either rate and term 7 or 10 years because I couldn't get 30-year fixed on it without paying significant fees. And I won't spend $25,000 to save myself, not being able to get a fixed rate for going from 10 years to a 30-year amortization. So it's a 30-year amortization. It's still a 25-year amortization on the commercial side, but it's 10 years before the rate adjusts. I'll roll my dice on 10 years because I've got 10 years of pay down that I'm going to have in that. And so that asset, those few assets that are commercial, those 4 or 5 assets will be well down the path. And the cash flow at that point will be so ridiculous that, if I want to pay, if I have to go through a rate adjustment for a year or 2, I can pay them off at that point with cash. So that would be the idea there. So that's what I expect in a recession. What I've done is I have levered up 70% loan to value, made sure all my assets are cash flowing at least 10%. I still have the same reserves. And I've created a bunch of cash that if recession does in fact hit, I'm going to be just as much of a buyer as I am now. I'm always a buyer unless I have too many projects on my plate at one given time. Or if it's only a good deal. I'm buying great deals right now. We closed on 2 in January. We're supposed to close on 1 at the end of February, and then we close on another one, I think the second week of March. So yeah, we still remain very busy. Yes. So great questions, Janet. Rob, did you get my Rice Krispies yet? No, they're still sold out. They're still sold out. I got the hookup from, so because of Eliana's diagnosis, we can't actually go into stores. So anything we do, it has to be online ordering. And right now, all 5 of the grocery stores local to us, none of them have Rice Krispies. We'll get them. It's all right. It's a luxury item. It is. I get it. It's a luxury item. That's what it is. Janet Santiago. Also, what do you think about 40-year mortgage program? How it will affect the real estate market? How it will impact new buyers? I like the 40-year largely. For investors, I really like it. I know Mike doesn't like it. Mike Zuber doesn't like it. Dion and I both like it because I think, again, we look at the asset of what's the lowest payment I can possibly get. It creates me more yield. And because, recycling capital, getting more yield, it doesn't matter if it's 40 years or 30 years, quite frankly. It really just comes down to how much, if to add that extra 10 years on, how much more am I getting as far as return on my capital? So I think it's still a math equation for me. If I got offered 40-year debt on some deals, it really depends on what the rate was. It remains just something else that you can add to the equation to evaluate getting your return on capital. As an example, I think some of the rates that I've seen are, 5.25, but buying 2 points to be at 5.25. So as you start to do that, if you're buying points at 5.25, you could be talking about, depending on the size of the transaction, let's just say it's, to buy that point, it's, $5,000. Well, if you're buying 2 points, that's $10,000. So that's that much more money you're having to put into the deal. So how long of carrying that 40-year mortgage payment, how many months? Because the first 10 years is largely interest only. So how long are you having to carry that mortgage to see that payoff? So I think it's still a math equation. I always like more options. I just do. I like more options. And so if we can get more options, I dig it. I like it. I don't like it for homeowners because I think that's going to put homeowners stuck in their homes. If we have a 5 to 10% recession or 5 to 10% or 10 to 15% dip in property values, they are going to be far off from being able to sell their home because it's about 8% to sell your asset. So let's say it's $100,000 home. You need $8,000 just to cover your closing costs, transfer costs, realtor costs, etc. So you have to basically go up to about $109,000 in value. Now, if you're buying in that window, which Dion and I believe exists, that window between now and when the 40-year becomes commercially available and a lot of people are doing it, and then they're pushing that program, that's going to up the price of assets. I think that that might end up based on the rate increase. Again, it depends because you could be looking at the same size payment you're looking at right now today with a 4 of an owner rock versus a 5.25 plus 2 points closing. It's just all the math. And I don't have the math yet on a 40-year to break it down for you, but we will. We'll definitely be figuring that out for sure. For sure. So that's how I look at the 40-year. How it will impact buyers is they're still going to need the down payment, but their debt to income is going to be better. But that's probably going to need to get better anyway, just based on the fact that banks tighten. One of the things I've seen consistent from all the different mortgage brokers that I talk to is that they are saying that the banks are tightening, that they're seeing that debt to income is going down. There's loans that were approved a couple of months ago that then needed to go through reapproval because they didn't find anything. And then those people got no answers or got lower, range of what they're allowed to buy. So that's what I can kind of continue to see coming. Janet, hi Rob. John Doe, good morning, John. Good morning. John said he listens to 98% of what I put out there. My wife doesn't even listen to 98% of what I put out there. So thank you, John. Appreciate it. Pallavi Patel, good morning. Good morning. Good morning. Khan, hi. Can you explain bonus depreciation and cost segregation? No, I can't. Nope, I won't. So, and the reason that I won't is because I'm going through it. I only talk about stuff. I'm like Mike. I only talk about stuff that I've done. I haven't done it yet. So I understand it. I know how it works, but I'm not going to talk about it just because I haven't done it. And there's a video on Mike's channel that's spectacular that actually covers it. I can tell you that for tax year 2021, so all of our taxes that we're filing now, we're doing cost seg. We're doing cost seg. We're doing all of that stuff. And so that's going to be with my awesome new accountant, and he will be doing, so I'm going to bring on tradesmen, and I'm going to bring on, so Mike does a great job bringing on other real estate investors and other people that can help out, with your journey. I'm going to focus more on the work, on the actual labor side. So I'm going to bring in tradesmen. I'm going to bring in, plumbers. I'm going to bring in some carpenters, just some quick tip things that I think will help you guys out as you're looking at your remodel, and be able to have you have a better conversation with your contractor so he doesn't think you're an idiot and then think it's okay to overcharge you. And you're not an idiot. I'm just saying you could come across that way if he's looking at that going, why is that guy keep on calling that a box? It's not a box. And then you can use their vernacular, which is one of the things that lends credibility, right? If I'm having a conversation with an electrician and we're talking about 1 gang, 2 gang, we're talking about paddle versus switch, those things are all mean something different. And it's something that can make sure that you're on the same page with your contractor. Yep. So we'll help you guys with that stuff. So Con, I appreciate the question, but yeah, I'll talk about bonus depreciation and cost segregation after I've done it, and I will be doing it. We will be filing our taxes this year with cost seg and depreciation, and then I'm actually going to have my accountant on to talk about it. Yeah, so that will happen. Vatzel, hey, good morning. Good morning, Vatzel. Have you ever had a rental property with a septic tank? Yep. What did you have to look for in inspection, and what did you tell tenants about dealing with a septic? So you can have a septic installed, or not installed, but inspected. One of the things that they'll do is they'll check the field, the leach field. It really just depends on a lot of what the construction of it was and when it was done. I know in my state to get a standard drawing to replace a septic, it's about $1,500 that you have to then have approved by the state. Once that happens, you can then have anybody come do the work, and then it still gets inspected basically after the ground's all been open. And then what you show the inspector, and then what they do to fill everything back in. Usually we'll do something called a stone and pipe. And that can be off of a vault. Vault is basically this big, huge thing that's off the house that holds your solid waste. And then the other stuff then gets pushed into your stone and pipe. And so most septic systems with leach fields, a lot of those will last, depending on what kind of system it is, 20, 25 years. If you're more than that, it's probably you're getting closer to needing if it's been pumped regularly, serviced regularly. I don't know what the long term is on stuff like Ridex and things like that they can put in your septic tank that can actually eat away at the waste, and it just leaves you with a cleaner field. I don't know, or that's the claim. I don't know if that's actually true. So the only thing that I would do is, if you're buying something with a septic, I would look at when it was done. I would have it inspected. And one of the least expensive things you can do is actually have it pumped. If you actually have their system pumped, you can see if your field is failing, because water will push back into, because it fills the void. So we actually saw that a field was failing on one of our deals because the ground would get so saturated that it was actually pushing stuff back into the vault, the septic vault. So we knew that was happening. So those are some of the things. Make sure you hire an inspector. Make sure that they know what to do when inspecting a septic field. A lot of times what they'll do is they'll actually take like this metal rod and they'll stick it down into where the field is. They'll then see if there's anything bubbling up from that, which means, you're going to be in trouble soon. It's also, if you have if a backfield is just wet, like you've seen that in movies like Meet the Fockers. That's what happens when a septic field fails, essentially. So just have it inspected. There's nothing special dealing with it. The only thing that you want to make sure is you want to use not the super dense, thick toilet paper. Things like that can cause a field to fail early. Hopefully that helps. Nothing I tell the tenants about it other than, hey, it's a septic tank, so you have to be extra careful what you flush down the toilet. I always tell them only bodily fluids. That's the only thing that can go down a toilet. And then I remove any garbage disposal. I would not have a garbage disposal in there because that absolutely contributes to clogging up your septic. Those are the things that I would do about septic. Yep. Hopefully that helps. Crimson Knight. Hey, hello. Good morning. Lots of people looking to move to NH for reasons, but can't because of prices, probably about 2,000 to 3,000 household formations who can't. This is a low estimate just of what I know. All of them are waiting for more affordable housing. Yeah, good luck. Wish in one hand and you know what in the other, right, Crimson Knight? I mean, pricing's not coming down in our area, especially. We've always been a fraction of Massachusetts. That percentage of Massachusetts is just going to be that much higher, especially in border towns. I mean, now it really makes sense. So for those of you out there who are wondering why that makes sense, you could get a $300,000 house in New Hampshire where the taxes are $8,000, but that same exact house in Massachusetts is $500,000, but the taxes on it are $6,500. And everyone says, oh, your property taxes are crazy high compared to the price of the house, but the house is much less expensive in New Hampshire than it is in Mass. The difference is Massachusetts starts at, I think, 5.25% or 5.75% income tax. So if you make $100,000, even as a husband and wife couple making $100,000, and if you're traveling from New Hampshire to Mass, it's probably higher. You could be looking at a tax bill of over $5,000 just on income tax, which wipes out the $1,500 and then puts you negative $3,500, right? So I expect New Hampshire to continue to drive because people are tired, and our state was open more than, and this isn't political, this is just factually speaking. Our state was open a ton more. We closed down a whole lot less stuff than Maine, Vermont, and Mass. Factually, we did. we actually, we took much less federal funding because we were much more self-sustaining. And so, yeah, New Hampshire's not perfect. Property taxes are high, but that also aligns the state with the landlords. Because if we're not getting rent, don't worry, that wasn't a beer. See, it was a Diet Mountain Dew. I don't drink coffee. And I felt like I needed a little bit of caffeine this morning. I'm not a big caffeine guy either, but a couple nights with the kids. Yeah. So anyway, so yeah, I think New Hampshire continues to drive. I do. Matt Shaver, good morning. Good to have you here. Matt, I can't remember the last time I saw you here. So if this is the first time, appreciate it. If this isn't the first time, welcome back. Jay Markey, good morning. Good morning. Good to have you. Chester Williams. So about retirement. Yeah. So about retirement, is that really a thing anymore? It seems like FI part of FIRE is more relevant nowadays. So it's retiring from working for somebody else. Yeah. So I've done, 70 in my 20s. I worked 90 to 100 hours a week. I worked a lot. But then met Ashley, my wife. But the great thing was she requires a lot of sleep. So she slept and I would work. And we would spend our 3 or 4 hours a day together after work. And then she would sleep and then I would work. But now that I have kids, that's slowing me down. And I'm old. And so, yeah, it's really just about clearing up the 45 hours a week that my day job gets me. If I can, because I've built my entire portfolio working a W-2. So I work 45, 50 hours a week doing that. And so the real big thing is just eliminating that. Yes, indeed. Dion, talk financial freedom. What search strategies would you use to look for 5 to 20 unit complex? So 5 to 20s are tough because there's not a ton of them. The thing I would still do is I would be looking at, me personally, I would be investing in a prop stream. I would be investing in a prop stream because they actually see all those tax records and all those cards. And one of the things you can know about a 5 to 20 is it would be a unicorn if the person that owned it lived there. That's pretty rare. Sorry, guys. I got people working on Sundays. You know the deal. You're gonna, hold on one second. Electrician checking on an issue. Yeah, I'm very interested to see what he finds. Very interested. So yeah, sorry. So yeah, so as you guys know, Sundays I have guys in the field working hard. I make sure to be attentive to them if they need something, have a question. I will read his response when he puts it down here. He's like, "Can you give me a call?" And I'm like, "I'm on something for the next couple hours. You'll just have to text it to me." So the 5 to 20, yeah, Dion, the only thing that I can tell you is I would be using a prop stream. I would be using some sort of a service like that to find anything. Other than that, just driving for dollars. I know you cover a broad expanse, and so driving for dollars would be a much more time consuming thing. It would take you out of your VR exercise program. And so, yeah, the only thing I can think of is prop stream or something, or a service like that. There's another one out there like that too. I can't remember the name of it. And I almost did a subscription to it, but I just don't need it right now. I've got I have a decent enough deal flow coming from existing people, and I don't have the time to go through all the prop stream reports. And so I'm not trying to create that next great deal. I'm creating it just by relationships and my network being my net worth being my network. John Williams, good morning. I'm Jack. Good morning. Crimson Knight, what is the floor underlayment you use? Best looks like Tranquility LVT underlayment from Lumber Liquidators for the soundproofing, currently on sale for 63 bucks a 100 square foot. It has best. Yeah, that's the stuff that's the best soundproof. So if you're top and bottom, I use the higher end soundproof stuff. If you're side by side, I'll use, if it's a moist basement, I'll use the antimicrobial. If it's not, then I'll just use their, I think it's a gray color. It's like a gray speckled color. That's the one that I'll use. Kenny A, good morning. Good morning, Kenny. Good morning. Chester Williams, there's only one way to pull excess liquidity out of the market, a sharp recession. Yep, agreed. And that sharp recession, I think, I mean, it will come if we see, 75 basis point rate increase. Like, holy cow, that will shock the market. And I think that puts transactions on hold or delays them, but I don't think it crashes prices. I think it might create some opportunity for very few people that actually have to sell, but I don't think there's a lot of people that have to sell right now. And it's certainly not going to put things into foreclosure, because even people that bought a year or a year and a half ago, they're up anywhere from 10 to 25% in their house value anyway. So, we don't have the same problem that we had last time, when it was, 52% of the mortgages, were 2 and 28s, or flexible rate refis that started going bad in 06 and then got really bad in 08. And that's when all the banks started to have to cover. Underwriting is completely different. I actually really liked, I know you guys will probably all go watch it, but I actually like the Bigger Pockets interview with Ivy Zellman. It was, quite frankly, probably the best interview of hers I'd ever seen, where it was the most complete answers. I don't agree with some of what she said, but I think overall, I think some of those things are definitely right. But I think the area that she's more pointing to is, she even said it. She said, if you have 30-year fixed rate debt and you're in an asset that goes with inflation, that's pretty good. I'm pretty sure that's what most of us are doing. So that's what I like. But yeah, we'll see. Hey, Jeremy Kirkwood, not cleaning your Airbnb today. Jeremy has an extremely heavy cash flow Airbnb. Probably don't have to clean it because now they're moving in. So you're good. And it's a shorter term rental, but it's still a term. Temp check for Lowe's tonight. I think I saw 9. I think, is not 9. Yeah, 9. So we're actually the same, I think. Give me just 1 second. I'll tell you. Okay, so sorry guys, contractor question. Always interesting. Okay, so we're able to isolate, I assume. Sorry, guys. Landlording at its finest right here. Yeah, weird. Oh yeah, sorry. So I was checking temperature. Tonight, I think it's 9. Nope, it's been updated. We are, I think we're getting that cold weather a day later. Yeah, so for us, it's 13 tonight, but it's 8 tomorrow night. Hell, I hate cold weather. It's so expensive. Oh, interesting anecdote. I was talking to a major landscaping company, something I think you guys would all like to know. Talking to a major landscaping company, they they said that holy cow, there's a ton of questions. They said that I'm gonna have to get through these. They said that to clean up 3 inches of slush and ice cost them just as much as it does to clean up 12 inches of snow. How about that? See, ice way worse, way worse. And you can get power outages, snapped lines. Yeah, slip and falls. Ice is way worse than snow. Yep, ice is way worse than snow. Crimson Knight, you said you acquired some Class C recently. What do you plan to do differently from your B and A class in terms of renovations? I suspect things not like not granite countertops. We actually left the units as they were. They're nice. They're clean. They're a little bit dated, but they're clean and they're nice. They were probably rehabbed in the 90s or 2000s. So they're nice. And we're just going to leave them as B for now. Yeah. Can you talk about the dichotomy between high appreciating assets, generally in Class A and Class B neighborhoods, and high cash flowing properties, generally in Class C neighborhoods? Holy crap, Chester. That's a long one. Dear God, that's a long one. So I can try. I will try. As you know, I'm not an economist. I'm a ninth grade dropout, but I can tell you what my experience has been. So here's what my experience has been. I find that Class A is new construction. Class A being new construction is usually has much less margin in it because you are building, and certainly now you're building, and with the rate at which you're building and the cost to build is significantly increased over an existing build. So here's an example. The building that they just built downtown was $330 a foot. When I buy real estate, I'm buying it for some of these older duplexes. I'm buying it at $150 a foot. Right? So if you're having to rent out based on $350 a foot or having to rent out based on $150 a foot, I can get $250 a foot, let's say, right? Or I can get the equivalent of what would, be significant margin in a B or C class, whereas the brand new A class can't. There's compression there. What ends up happening is over time, though, that building turns from an A class to a B class because it gets aged, and they usually won't update them that quickly. So that will age, but because the debt will be lower, ideally the debt's lower. What's going to happen though is I think here's what is that rates rise or that rents rise over time. But in this particular cycle, I believe rates will significantly increase. Therefore, their debt will become more expensive to service. So I don't expect that the significant margins are going to be there on the A. I think that where they would normally get those significant margins is, rehabbing after 20 years. But if rates on that commercial stuff go to 8 and they're right now at, they were at 4, well, that's double just to manage their debt service. So Chester Williams, tell me how you think I did. And then generally it's really good in Class C's because that's older. It's my comparison of it's older existing buildings. And even if I rehab it and spend $50 a foot rehabbing it, I'm 150 to 200, right? But I'm completely rehabbed. So I'm still, if I'm a C, I'm still in a decent neighborhood with new finishes, but I'm not brand new construction. So I'm not going to be Class A, but I am Class B. So that's where I view it. And I think that the downshift of people in A's that live in A's now, I've had a number of them that are paying, $2,875 to $3,200 in a brand new building downtown for a 2-bedroom. They moved into one. I've had a couple of those people move into my 2 bedrooms. My 2 bedrooms are B's. meaning they're older construction, but they've been completely rehabbed. And so they're very nice, but they're not in a high-rise building in downtown. And so my 2-bedroom is $1,695. They're thrilled. I'm thrilled because when I bought that building years ago, 6-8 years ago, that 2-bedroom was renting for $1,000 a month. So I am 70% higher than what I was. And that's still a massive discount over what it is downtown. The magic is how close can I get to that? How close can I get to their number without demand destruction? And my guess is when this thing renews this year, I'm probably going to get a lot closer. I'll probably get to, let's give them a 30% discount, right? And so that means I'm still going to be 19 to $2,000, but all of that money for me, every dime, almost every dime of it is all down to the bottom line. That's how my portfolio exploded in profitability this year. And so, I increased 7 figures of portfolio value increase based on what the economy did. Again, I'm not doing anything with that other than now was the right time to refi, to cash out, to not turn it into a bad asset, still get more than my 10% return on capital. In fact, still in many cases, 20%, but I didn't need 35. I didn't need a 35% return on capital. At that point, that was just that much more money I was going to have to pay taxes on. So I can reduce that, still be at 20. I'm still plenty safe. If I need to sell, I still have if the market goes down 20%, I still have 10%, which covers the 8% of my closing. So it still leaves me a couple of percent. Probably I walk away with some money if I had to sell. But on top of walking with that some money, every single month, I'm still making 20% on my initial capital investment. So Chester, let me know if I hit that. I'm going to literally scroll down, Chester, and I don't usually do this, but I'm going to literally scroll all the way down. That was great, Matt. Inspiration from the question came from a BP episode about when it makes sense to look at high cash flowing properties over high appreciating properties, or vice versa. Yeah, I don't like new construction. I don't like it. Don't like it. Because the other thing too is that, again, what's my superpower? My superpower is you guys have seen my videos. You guys have seen what I do to properties. You guys, if you're not following me on Instagram, you need to be following me on Instagram at Lumberjack Landlord, at Lumberjack Landlord, at Lumberjack Landlord. When I get off the show, I expected a bunch more people should be following me on Instagram. That's the one thing that I ask you guys, really make sure that you're following me on Instagram. There is a ton of stuff that I'm putting out there. I've made the commitment this year to post something every single day that will help landlords get better. So I'm going to help and continue to help landlords get better. Give me just 1 second. I got to mute all this stuff. But I will continue to help you guys get better. But that's how I'm going to do it, is showing you guys on Instagram. I'll still do the videos with Mike and Dion. We'll have some other special guests coming on. In fact, I've got a killer this Thursday. It's going to blow your minds, guys. It's going to absolutely blow your minds. Yep. It's going to blow your minds who I've got coming. But absolutely worth, it'll blow your minds who I've got coming up on the show this week. And I'm not really even doing those. The only reason I'm doing it is because I had a relationship from the guy months and months ago, and just reached out to him, had some questions for him. And then I said, hey, why don't we just jump on and do a thing? And he's like, yeah, let's do a thing. So we're doing a thing. I'm making time for it. So yeah. So Chester, thank you for the thumbs up. I'm glad that helped. And you can let me know too, if that's what that video on Bigger Pockets was saying, because I don't always agree with them. Big surprise. Jernil Diaz, good morning, Matt. Good morning. Can you go into detail on one of your seller financing deals? Nope. The only reason is because I only have one and it kind of flopped. And the reason that it flopped was because I negotiated the deal so hard. He originally was going to hold $175,000 of the purchase. He ended up only holding $35,000. So it's kind of a who cares, so what? It's only 35 grand. It's a couple $100. I didn't really even need to do the deal. I just wanted to put him in it because I didn't want to have to go back to the bank. So when I do some more seller financing deals, yes, I promise I will absolutely do that. And then I'll take you through some. But yeah, I haven't done enough seller finance deals yet. I had one that I passed on that was 54 units. It was a massive deal. It was just the number, nothing worked. Nothing worked on the numbers. The guy was a total slumlord, and I talked to some people that have bought property from before, and every single one was like, yeah, 10 grand in hidden issues, stuff that they knew about before. They didn't let me know. It wasn't good. It wasn't good. So I was just like, I can't take that hit across 54 units. Can't take that size of a hit. And he wasn't willing to work on the price at all. And it just didn't make sense. So one of the concepts you'll hear me use is something called highest and best. That comes from appraisal speak. Appraisers talk about highest and best. They'll talk about highest and best use of a property. And so I talk about highest and best use of my cash. The money that I spend, or even the credit that I'm extended, what's the highest and best use of that? That's what I have to look at. So I said no to a deal this week that was about 14% return on capital, because everything that I'm closing is in the 20s. I'll keep my powder dry. I'll wait for the next 20 or 25 to come along, or 35 to come along. I've had some of those. So yeah. Con FL, what steps do you take to rent a place out? Great question. So we have the pictures. We have pictures from the place. We have a write-up that I've already done. If anything's changed about it, because to recycle the same one over and over again. I do kind of a top 10 list. Here's the top 10 reasons you want to live here. And that's where I put in all the amenities, right? On-site washer and dryer, close to downtown, building, building that already has kids or things like that, just to kind of put it out there and say, this is me. This is what the unit is. Apply as you see fit. And so we just list off kind of what the building is, location. We don't give out addresses anymore because we got too many people literally like doing the leering and drive-bys. And we've had some people so rude as to knock on doors. What is wrong with people? Like no personal space, no respect. And so we stopped doing addresses, and then we would just set up a time where we say, okay, this is when it is, and meet us there, type of thing. So yeah. Yep. So I see some people who joined Instagram to follow me more. There's going to be so much data out there, guys. I'm telling you. And there's even so much out there already. Like every day there's something there that you can learn from. Stupid something that I did, or that one of a contractor did, or just some better way to manage your business. So yeah, to rent out a place, Con, it would be, I have an ad already written. I have pictures already taken. And then it's a matter of, for me, my market, Craigslist works awesome. So I haven't had to go outside of Craigslist to pay outside of Craigslist. It used to be apartments.com and Zillow. I don't even have to list there anymore. Craigslist has so much there. And a lot of times I'll even, call one of the housing authority, because we were trying to increase our percentage of our portfolio that was out like that. And so based on that, we would actually advertise into that space, and basically say, yep, we've got this unit coming available. Let me know, what my criteria is. So based on what my criteria is, please feel free to have them apply. And so we'd have them apply. And based on those applications, we would then set up things where they could then come take a look at it. So that is what we would do. So yeah, that's how I get that to market. And then it's just a matter of, depending, a lot of what we have come in, I'll then just say, hey, in my ad, I'll say, hey, and don't just ask me if the apartment's still available. If it's posted, like I have a little fun with it, if you couldn't tell. Don't just ask me if it's available. If the ad's still up, it's still available. But I'll say, in your response back, please tell me something about yourself. And I say, doesn't have any bearing on whether or not you get to see the place, but would just like to know who I'm talking to. And then based on those responses, here's the thing. If somebody asks me if it's still available, they didn't even read the entire ad. Bye. I don't even bother returning their email. I don't have to. If you're not going to engage in the process, then don't engage in the process. That's simple. Chester Williams, when would it make sense to trade, a 1031 exchange, out of one and into the other property type? Damn, Chester's going for the goal with the questions today. I could do entire shows on this, man. So when does it make sense? So for me, I did a deal last year where I bought the property. It was a duplex. I knew the numbers were going to be absolutely awesome. But when I finished it, my rents I thought were going to be like about 4,500 to 5,000 bucks a month. That's what I thought they would be. And so I was like, you know what? I like the asset, but I bought the thing so right. I bought it for 250 and I put 60-ish into it. So I was only 3 and change into it. Well, to buy it, I had to put 20% down. Or 25, 20. I had to put 20% down and I had 65,000 bucks tied up in it. But the property was worth 550 when I finished the project. As I'm running all these comps in that part of the city, stuff was going nuts, crazy pricing. Crazy pricing. Give me just 1 second here. I gotta see what this is. Well, that's a helpful alert. You have your upcoming live stream. 51 minutes ago, I did. Anyway, pricing in that neighborhood was going absolutely nuts. And so I just was like, you know what? Maybe I'll just sell it. Then one of my friends heard me say I was going to sell it. He's like, dude, I want to buy this property. I'm like, really? Well, so I did an off-market deal. I wasn't going to sell or finance it because I wanted all my money out. But here's the thing. I sold that property, I think, for $555 or $550 to him with no realtor, no broker fees, nothing. The only thing that we had was paperwork transfer tax. It's a few $1,000, wasn't a big deal. So in that 1031, I got I think I only owed like 190 something on it. So I got a check into my 1031 account for $350,000. I bought 3 more buildings with that. So that's when it made sense to me on that particular asset. Normally I would have held that asset, but even if I'd done a cash out refi, I might have gotten 150 out of it, maybe 150 out of it. Instead, I got 330 out of it. That bought me 3 more buildings. So the cash flow on that building would have been a couple $1,000 a month. Well, I can tell you the cash flow on the 3 buildings that I bought is like $9,000 a month on those 3 buildings that I bought with that money. So yeah, it basically that one house, buying it right, rehabbing it right, selling it right, walking away from that income. That's where I'm willing to pivot. I don't flip. I don't like to flip because I don't believe in building in earth and creating the value in a property just to then flip it and make 30 grand. 5 years ago, 30 grand was all the money in the world to me. Now it's not, based on how big the business is. I would rather get 15,000 bucks or 12,000 bucks a year in return on my capital for infinity and beyond over a $30,000 hit, because I'm still gonna have to go do something with that $30,000 and find an asset to put that money into. Hopefully that makes sense. So Chester, hopefully that answers the question. Do you ever rent the Riley A-OK? Do I ever rent a family? Yes, I have. One time it went pretty well, and one time it didn't go very well. Actually, 2 times it didn't go very well. 2 times it didn't go very well. One time went fine. And the other 2, it did not. So largely speaking, it's really a matter of the person. The problem is when you enter one family member and the other family knows that you rent to that family member, then largely you have to go back and rent to that family member, the other family member. That was the mistake. And I should have treated it just like a normal business transaction. I should have treated it just like a normal business and just said, hey, you're being denied based on this. And just live with the consequence. Keith Hager, have you ever bought tax sales estates portfolios? Yes. So yes, yes, and yes. Yeah, I bought all of them. Yep. Yeah, I bought auctions. I've bought pretty much every way you can. The only way that I haven't bought yet is sub 2. It's the only way I haven't bought yet. Pace Morby, Ryan Nichols in Zuber's course. one rental at a time. And then Pace is, I believe he's the absolute, guru when it comes to sub two. I've watched a bunch of his stuff. We'll do sub twos. I think the sub twos will become really attractive in the coming few years when people are underwater in their home, but they have a 3% mortgage or a 2.5% mortgage and they can't afford to sell it and they just need to get out from under it because they have to move. I think 2, 3, and 4 units from an asset perspective will be the best asset performing in the market in the next 5 years. I believe that sub 2 deals will largely be your most profitable, I think, in the next 5 years. Because as the market shifts, as rates continue to climb, pricing that will eventually affect, is it 5%? Is it 10%? Is it 20%? Impossible to say. It depends on what happens in the economy, but then that's when people then can't get out of their house because they can't afford the 8% to pay the rep. So let's say they're flat in 2 years. Let's say they have to move and they're flat. They'll have to write a check for the 8% they're going to have to come up with to transfer out of the property to sell it to somebody else. Whereas a sub 2 works perfectly. It just does. Sub 2 works perfectly for those folks. And then there's a bunch of ways you can structure that as well to drastically reduce the tax risk. So yeah, sub 2 I think is going to be the next thing to know. Not this year, probably not next year, probably some points of next year, but moving on forward, 24. Yeah, sure. Yeah, for sure. Yep. Crimson Knight, do you recommend home improvement loans? I need extra cash because I was off on the IBC boilers. I thought around 8 to 10K per, but from your last live stream, you said going to be more like 15K because of new baseboard. Yeah. So to get the IBC installed, you're $8,000 to $10,000. But if you have to add all brand new baseboard around, you're probably 15 or 16. I don't mind home. Like you can even get because that's a high-end energy upgrade. You can do like a credit union Energy Star type loans. You can also talk to NH Saves, I think is back. I think that they brought that program back, Crimson. So you can take a look at that. NH Saves, I think, might be back. And yeah, I think it's just like anything else. It's what's the cost? If you have to do it and you don't have the money, then you have to do it. Or your other option is, putting it on a credit card. That's, and again, it just comes down to cost of money. So Steve Dave, good morning. Good morning, Steve Dave. Good morning. Jan Santiago, me too. Listen to you a lot. I appreciate that. Appreciate that very much. Mickey Blount, good morning. Thank you for the time to talk to us. Mickey, you're very welcome. I'm happy to do it. I'm happy to do it. Beats the work week. Ever reused kitchen cabinets or countertops in a different property? Yes. In the beginning, not now. So I have, in fact, we take the old kitchens that we take out. If they're just dated kitchens, we actually will bring them back to the Habitat for Humanity store and we'll bring them back to them and just give them to them. We'll just donate the old kitchen. So we do our best to keep the countertops intact and keep the cabinets intact. And that way they have something to sell and somebody can make use of it. We don't want to throw it away. We know that they can get use out of it. For us, we did that in the very beginning because frankly, we couldn't afford new cabinets. And now we don't. Now, if we're going to do a kitchen because of the labor and time and effort and energy, we just assume do a kitchen and be done with it. Like you guys saw on Instagram. Over the last few days, you see what our kitchens look like. Chester Williams, I'll take a crack at it. Bonus depreciation is based on depreciable assets that come as a result of cost segregation engineering study. Yep. The added depreciation is a further tax write-off. Yep, that's a good explanation. Then the other thing too is it basically takes out the land because you can't depreciate the land. You can only depreciate the actual building, which is the asset. So that's where the cost segregation piece comes in. Yeah. John Doe, I listened to 100% of your stuff, Matt. Very cool. I was talking about going back and listening to 98% of Mike's videos. Oh my goodness, created from the beginning. I listened to some of his stuff in the beginning. It's not as good as the stuff that he's created now. Yeah, so true. Chester Williams on one chat comment. Yeah, well done. Well done. Antoine. Hey, Antoine, good morning. I'm in the middle of a rehab on a duplex. Cool. Thinking I'll be done by late spring. Okay, cool. Do you think rates will be responsible by that time? No, I think they're going to be higher. I think rates in the springtime will be higher. Yep. Yep. Again, just my crystal ball. I don't know anything that you guys don't know, but just the feeling that I get based on what I'm seeing happen in the market, the fact that you've got Fed chairs coming out and saying, I'm expecting 100 points by July. Really? For me, I get that the shoes you're in. So this is why I hate the BRRR strategy right now. I just did a video on my channel. Check it out. It's called, why BRRR fails or something like that. And it's because you have to depend on three things. One is the rate when you go to refi. Two is who the appraiser is that actually appraises your house. And do they believe, based on it not being a two-sided transaction, having a buyer and a seller, based on they're just coming up with what I believe this is what it worth. So it's largely more conservative than a buy and sell transaction. And third thing is the materials that you're using and how long it takes you to get them and how long that delays the process. That just has what you call a lot of dead days. Dead days are very expensive. The house sitting there from a project perspective might cost me between taxes and mortgage and blah, 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 blah. It might be $100 a day, right? But when I tell a contractor be there Monday, here's all this stuff, guess what happens? He's there Monday, stuff isn't there. He says, I had the entire week booked out for you. I got to go do the next job. So he'll go and do the next job. And then he's not back on Wednesday. He's back the following Wednesday or Friday. So I lose a week and a half of dead days. I used to be able to flip a house in 30 days or less. Meaning, and flip, not meaning sell, flip meaning start the rehab and finish it. Extended time, maybe 60 days. Now can't be done in less than 90, just because of delays just like that. We're waiting on one. We can't get any further on it until the windows come in. And when we had first talked to them about the windows, they said, yeah, 3 weeks. Then it was 50 business days. It's 10 weeks. When we went to go order them, I was like, are you joking? I looked everywhere else and everyone was having the same exact problems. And these are because these are special windows. And so we should get the windows in this week, but that project has been dead for 6 weeks. There's nothing more that we could do, because I'm not going to do a bunch of the stuff on the inside when I have the outside only wrapped and not fully insulate. I got to get the windows in there, and then I can then do the siding on the outside. I can finish off all the work on the inside, etc. Because I can't keep the building any temperature to do anything. So, yep, 6 weeks of dead days. That stunk. So it was what it was. But yeah, Antoine, I don't think rates are going to be good anytime soon. Crimson Knight, have you used radiant paneling? It's what my plumber is recommending for the boiler heat instead of baseboard. I've not used I've used the bigger radiators that like hang on the wall. I've used those. I don't know if that's what he's calling radiant paneling. I don't know. Don't know if that's what he's calling it, but the bigger ones that hang off a wall, I've used those. Yep. They're crazy expensive per. Like crazy expensive. Like one was like $800 and that took the place of what would have been $300 worth of baseboard. So I didn't see any economic return. So if that's what he's calling a panel, but I don't know. Mine was just like a bigger forced hot water radiator that we hung under the kitchen bar. And then we didn't run baseboard on the perimeter of the house, or on the perimeter of the first floor in the living room. So it gives a better layout. So maybe, but yeah, if that's what he's calling it. Pallavi, I'm coming up in my search across often properties with septic sewer. Okay, need your input. Oops, what I sent this question already asked same question. Oh, no worries. Take a look at that, Pallavi, and let me know underneath if what you found answered your question. I'm happy to answer it. Khan, do you have tenant take out trash to curb and cut lawn? Do you reduce the rent for it? Yeah, they have to take out their own trash. Yep. The lawn, no. Mm-mm. Nope. Nope. Not unless they do it like, I mean, I think we have a couple places that do it, but I don't provide them anything. Like they're just like, yeah, he's like, I don't mind doing the lawn. It's like, okay, sounds good. Do the lawn. You can do the lawn. That works. So yeah, and taking anything out. I mean, our lawn season here is 5 months. And I have a guy that comes and literally gets all of my lawns done in 10 hours. He makes it a 1 10-hour day and he works on all of my lawns because a lot of them are like in a downtown area where they have like a little patch of grass. I have probably 12 lawns that add up to 1/10 of an acre. It's just doing the stop and doing the strip and cleaning it up. So yeah, I don't pay for trash takeout. Commercial units, you have to have a dumpster available, but they still have to put the bag in the trash. Crimson Night. I watched Thursday night's live stream late. Cool. Something was said about an oil or boiler in a house you own for 5+ years. I thought you changed those IBC right away. If not, what you make that call? So we don't. So I don't go in and see that a boiler is perfectly good and rip it out. The way that we do it is if the boiler that's there is questionable, if it's old, if it hasn't been well maintained, if when my guy goes to maintain it, he goes, geez, you're really rolling the dice on this thing, then it's a no question. Then we upgraded the IBC. The other contributing factor for IBC is, do they have natural gas at the street? If they don't have natural gas and I have to go propane, that's also a consideration as well. So there's a lot of varying factors. The goal is to always have something that's safe and reliable. And if it's not safe and reliable, then to spend money. I want safe and reliable, period. I want safe and reliable. I want as few calls as possible. I also want efficiency because that efficiency in those systems is going to be what makes people stay. So those, so if a oil boiler is 15 years old and needs replacing, my go-to is always, let's look at, is there gas available at the street? Is there propane available there? My goal is to always look to change it out to an IBC. That's always my goal. Always my goal. I want low risk. I want efficiency. I want modern. I want upgraded. I want fewer calls, as the fewest calls as possible from a tenant saying oil heat tenants will run out of fuel, even if you have them on automatic delivery. It's a guarantee. It happens. And those systems need to be cleaned every year. And a lot of times when I buy from, bad landlords, like the 2 duplexes I just bought, all 4 of them, they all needed cleaning badly. The guy was like, these probably haven't been cleaned in 5 years. So each one of those services cost me, instead of a normal $225 service, each one of those services was like $400 or $500 because there were parts that he had to replace because they hadn't been serviced and hadn't been cleaned. So yeah, so I don't always just walk in and gut and replace. Anytime there's debate of, is the system in good shape? Is it reliable? Will it be a problem? That's what takes me down the path of, if it's old, if it's not running properly and we can't get it just tuned up, like, well, we're not wasteful of our capital. But the goal is always, we know what our replacement is if we need to replace. Very rarely will I replace an oil boiler with another oil boiler. It's been very rare. In the last 20 systems that I've done, we did an oil replacement. Last 25 systems, we did 1 oil for oil replacement. Yep, 1 oil for oil replacement. And it was because of what the system was, where it was in the house. There was no natural gas there. The propane companies didn't like delivering there. They're just like, ooh, it's kind of a bad spot. Okay. So at that point, it was just like, all right, fine. We'll just keep it oil. Fine. and oil is much less expensive to install. So yeah, that's what it is. Josh Engen in Washington State. Cool. It's required that the septic is inspected prior to closing. Yeah, that would make sense. That's just smart. I would never buy a house with a septic that wasn't inspected, because that's a $15,000 repair cost or replace cost. Crimson Knight, I need to stop forgetting about those streams. Yeah, they're really good with Ashley, myself and Ashley. They're a lot of fun too. That's our date night. So Chester Williams, well, maybe 2 chat comments. The specific depreciable assets are fixture improvements not attached to the fixed asset, e.g. windows, blinds, curtains, light fixtures, not the light switch, etc. Yes. Don't worry, Chester. I will have an actual expert, and that's a very good answer. I'll have an actual expert come in and take us through it, just because that's the best I can do. And he's going to be the one that's going to do my taxes. So am I any closer on the questions here? Oh, Toledo, man, you guys are good. Got buried. All right. Tim Crawford. Hey, hello, Tim Crawford. Hello. Unless we have a debt jubilee, we're going to see even higher appreciating assets. Yep. Notwithstanding a completely stupid, completely avoidable housing crisis like 08. Yeah, I don't think the housing crisis like 08 will happen, but I think we're due for some, we're gonna get some pain. You know, we're gonna get a recession, we're gonna get some higher unemployment. It wouldn't shock me at all if unemployment got to 8 or 9 or 10%. That still means 90% of people are working. Wouldn't surprise me at all if we had a 5 or 10 or 15% housing correction, maybe even as high as 20, but I don't believe anything past that. Yeah, I mean, ready for pain. Like, okay. It really comes down to the asset that you're buying. Is it a great deal? And are you getting 30-year fixed rate debt? And are your rents covering, you know, is it good, solid cash flow? Those are the main contributors. Those are the main factors that I'm going to still continue to watch for sure. Yep. Awesome. Well, we are crushing through. Wow, we've already done an hour. So I'm Matt. I'm a lumberjack landlord. I own over 100 units with my lovely wife, Mrs. Lumberjack. And we're just here answering questions about real estate investment. And we do it all. We self-manage, we buy, we don't sell very often. And we do all of our own bookkeeping, but we don't do any of our own taxes for obvious reasons. It's extremely complex. So thankfully, I got a new amazing accountant who I'm very excited to be with. And we'll make that announcement in the next couple of weeks, because he's going to be somebody that you guys, I think, will be able to find a lot of help from as well. So he's just fantastic. Although it's probably going to be after tax season now that I think about it. So we're halfway through February. So I would suspect it's probably going to be 8 weeks. It probably isn't going to help you this year, is my guess, but we'll see. We'll see if I can get him on before the end of the year. Kip Stevens. Hey, good morning, Kip. Family's doing great. Hope your daughter's doing better. She is. She goes down tomorrow for lab tests. And I expect she'll need blood. I expect she'll need blood platelets. So they do both of those infusions separately. So I expect she'll need both of those because that's what happens after that 5-day treatment. Yeah. Crimson Knight 921. Have you seen the bill in the NH House that requires all municipalities to allow up to 4 unit in any single home family zoning that has water sewer? Don't think it's going to pass. Yes, I have seen that. And obviously that would be awesome. That would be awesome, because it would eliminate so much of this stupidity where it's the only problem that you're going to have is that bye single family zoning, right? That'll be tough. That'll be tough. People will be looking to, my guess is they'll probably still have some sort of a land requirement. So yeah, it'll be interesting to see. I know that nothing's going up around me. I abut a house that no one will ever knock down. And the guy next to me owns 20 acres that's not subdividable. So yeah. And behind me is conservation land. So that's why we picked this house. No one's building next to me. But yeah, there's pros and cons to it, but that would help the affordability issue for sure. Although if you're building at $350 a foot, it won't really matter. Because if you're building a 3,000 square foot, you're 750 square foot per unit. The bigger issue that you have is with parents, with kids, and then the school system getting flooded. That's the bigger issue that you have. And the cost per child in New Hampshire, it's pretty high cost per child for education. And so you can have a 3-family home or 3-bedroom home, 2 kids, set of parents. They're paying, that building is $10,000 a year in taxes, but each one of those kids costs $14,000 a year to send to school. So it's 28,000. So it's a net negative. I know those numbers for a reason. So I'll be sharing that story later. Probably not today, but I will be. John Doe. Hey, Matt, back when you did HELOCs. Yep. Did you ever refinance them after the first year low teaser rate expired? The reset low rate for another year. I heard that strategy somewhere. So yeah, so I did. I did but now I won't do HELOCs anymore. I won't do them anymore because I got in 08 when I couldn't refinance it and they just decided to shut it off. And there was literally nothing I could do about it. So yeah, no HELOCs for me. I'll do cash out refis, 70% loan to value. That's still largely what I'm doing with my assets. We're about to close on 9 of those the end of this month. And then at that point, I've only got stragglers left. I've got, I think, 3 or 4 more deals that could benefit from that, but that's it. And at that point, the rate might be an issue. So we'll see. Kenny A, do you always use an additional underlayment in addition to what is attached to the LVP? No, I do not. If that subfloor is good, then that one's good enough for me. And if there's nobody living below it, it's good enough for me. So I don't always use an underlayment. Nope. I don't know what that says about the warranty, but I don't. So no. In fact, we just did the last 2 projects we just did had no underlayment. They were just purely click lock install on top of existing floor. Josh Engen, interview with Ivy on bigger pockets was very interesting. Not sure exactly what to make of it. Yeah. So Josh, I'm not sure if you heard in the very beginning, I watched that interview. I'm not finished it yet. Some of the stuff I agree with and some of it I just vehemently disagree with. Like, does she really have a C-suite executive that is so numb that they're calling her up and saying, I bought this place for 1.5. I was offered 3.8. Do you think I should sell? Like, there's so much more to it than that. Like, even if you sell, the 2-3 that you make, you're going to give back half. Plus the realtor fees, blah, blah, blah. It just, there's so many other, like, why are you selling? Like, so all the other questions, why are you selling? Do you need to sell? Do you want to sell? Like, what? So yeah, I think that analysts are great in one vein. They try and look out and they analyze data to try and come up with what past data is going to help predict the future, right? But that's an art. That's not a science. It's not a science, because if that were the case, the Zillow algorithm would have worked, which it didn't. Just saying. So yeah, I'm going to finish watching the interview. I've got some notes, but yeah, I'm going to finish watching that interview because I want to listen. Hey, listen, even though I disagree with people, I still watch them. I still watch that pinhead on Reventure every once in a while, not so much anymore, just because he's so wrong. And my blood boils every single time somebody pays him $5 to look at their market. And he's also hedging a little bit. He's hedging just a little bit. And like Zillow, like how much credibility does Zillow have? They just upped their forecast for 11% house growth or price growth this year in homes, 11% up to 16 with Goldman Sachs. And the other thing too is, like Ivy said, one of the things that I thought was very honest of her, and I don't know if she realized how honest she was being. She said, yeah, we really kind of got out of the market, or when we really felt like all the the yellow flags started appearing in 2020. So we got unbullish on the market in 2020. Well, that was like in the middle of 2020, right? So, or beginning to middle of 2020. Since then, we've had 30% appreciation. Now, again, I don't build my portfolio based on appreciation, but if you're paying an analyst to say, hey, I'm paying you to give me data so I understand the timing, and you miss out on a 30% increase if I'm the customer, I'm a little bit pissed off that I missed 30% uptick. And then her answer was, well, we don't really look at what's 6 months out. We look at what's years out. Well, being early is just as bad as being wrong, because you're wrong for a period of time in waiting for what you said was going to happen. That's why I think that for me, I don't give investment advice, but what I'm doing is I'm doing deals with 30-year fixed rate debt that still make sense. And if they make sense and they make me money, that's what I'll continue to do. That's how it makes sense to me. But that's just me. But yeah, I don't know what to make of all of it either. I think there was some information in there that what I think she's really talking about mostly is like these syndications that are going to have to reprice their debt in a few years. I think I mean, she wasn't saying it specifically, but that was kind of my takeaway is when you go to refi that property, when you go to do something on that property, you're going to need to refinance. And what's that debt market going to look like at that point? And one of the things that the guy said, the host, David, one of the things that he said in the interview was 100% incorrect. He said, the money's been taken off the sidelines. No, it has not. It has not. The Fed has not started to taper purchases yet. So that's not the case. And that's what I believe that's what he was referring to. And then the second piece was rate increase. The Fed hasn't increased the rate. This is just what we're talking about them going to do. It still hasn't happened yet. So while rates have moved up, yes, Fed's not done anything yet. They haven't tapered the balance sheet and they haven't raised the rate. So this is based on belief of what's going to happen in the coming market. But that's just me. That's just me. I also thought it was interesting. I didn't know that that host owned a mortgage company. I thought that was interesting. Crimson Knight, when I paint my cabinets, should I pull a meat Kevin and paint over the outside door hinges because no one will notice? Yeah, if you want to have a trashy rental. I don't do that. Yeah, I don't do that. We either replace the kitchen. We have repainted cabinets a couple times, but that means we get them all brand new hardware, because literally brand new hardware for those things might cost you $50. Yeah. I can't believe Kevin got away with it. I mean, again, perfect example of rising tide lifting all boats. Let's see how he does through a crash. Let's see how he manages through a recession. Stock market crash, real estate recession, or economy recession, but real estate slowdown. Let's see how he manages through that. I bet his business doesn't make any money if he's he better still be making 20 million a year off of YouTube if he wants to keep up. And he's a smart guy, but rising tide lifts all boats in this market, so it's warm in my office. Sorry, guys. Jeremy Kirkwood, we have expanded a lot, manage my Airbnbs now and furnish for other investors. Yeah, at 25% profit stake. Nice. Has been an amazing right turn in my business model. Awesome. Have a whole team now. Yes, I am in an Airbnb. Awesome. Yeah, I figured you were. Getting salt to a guest. Love it. Fantastic. Yeah, cool. Yeah, I'm not in the Airbnb game. I won't be. Too high touch for me. Too much turnover. I get it. The numbers are good. But it's actually all the Airbnbers out there. Most people don't think about this. Look at AirDNA for a different reason. I look at AirDNA to see how many Airbnbs are in my market. Not so I can do Airbnb, but so I can do more long-term rentals. Because 5 years ago, 0 of them existed. 0. So I've got 200 units in my market that disappeared and are off the market because they're being used as Airbnb. So different business model. I love them. They have helped drastically increase my monthly rents because there's that much less inventory. So thanks, guys. I appreciate it. But that's why I use AirDNA. As I'll look at AirDNA and I'll look at how many units they have on there from my market. And that number continues to go up every month. The number of units available. And they're not building rentable units, not nearly as fast. So that's helping propel growth for me. And even if they do get all thrown on the market, they'll get scooped up, but might I have a couple of others on the unit, but they're not going to all fall to the market at the same time. So we'll see. I suspect recession will affect them the most, is my guess. Chester Williams. That was great, Matt. Yes, that inspiration came from the BP Pockets episode. Yeah, it makes sense to take a look at high cash flowing properties over high appreciating properties. I don't buy for appreciation, so I'll never buy a property based on the fact that I think it's going to appreciate a bunch. That's just my model. I just don't agree with buying properties based on appreciation, because there were a lot of people that died the financial death in the Great Recession because of that. They couldn't refinance, or they couldn't rent had increased to too much, or it was too expensive. The margins were too skinny, all sorts of, horrible, nasty things. Yeah. So that's a hard pass for me. BK. Hi, BL. I'm in St. Louis. I have a 2-fam. I'm thinking of selling. Okay. Cash flow is roughly $900 a month. Has an 80K debt at 4%, could sell for 200K plus. Declining area. Is it good to sell to scale up? So personal preference. So I don't give financial advice on when to sell or when to buy. I can tell you in my shoes, what I've done with properties like that in the past is, so I've done all of the above. So that's where my answer is not a good answer for you. I've done all the above. I have refied them cash out 70% loan to value to decrease the amount of cash flow that I make per month, but to then still give me the ability to go buy something else. I think that seasoned assets are important to have. And so for me, I can't give you that advice. I'd love to. But for me, I've always been more inclined to, in some cases, I've 1031 sold out and bought something else. The problem is what you're going to buy is probably going to be more than 4%. It's probably going to be far more expensive than the 80K, right? That you own the place, but you have 120,000 you'll be getting out. I always try to keep assets like that, like declining area. Like, what does that mean, right? What does declining area mean? Prices aren't going down, I would assume, unless you're like one of 3 markets in the entire country where that's happening. So for me, I'm not a fan of selling those assets. The times that I sell is when like it's a single family and the affordability index tells me to sell. I sold 2 single families last year. And the reason that I sold them was the affordability index was a 4, meaning 4% of the people making median income could afford a median house. So that's why I sold. So I can't tell you whether or not to sell, because I think it depends on what you're going to do with the money. I think it depends on so many other factors. What I've done in the past, like I said, I've 1031 and bought other assets. The problem is that inventory is probably not there now. What I've done that's been more successful is if I know it's worth, 200 grand, I can lever it up with 140 in debt instead of 80 in debt. If I can still get that 4% mortgage, that's where all the numbers look at. So it would really depend on what you're going to do with the money. But likely for me, I wouldn't be getting rid of a duplex as an asset. I think that those assets are going to be the best performing assets. Sorry. That was plumbing supplies. I think those assets are going to be the best performing assets for the next 2 to 5 years. That's my belief. So that's how and again, that's not advice. That's what I'm investing in. That's how I'm investing. So for what that's worth. Oh my goodness. Let's just see what they said. Okay. All right, we're coming up at 1 o'clock, so we are halfway through the live stream. Super excited to have you guys with me. I'm Matt, aka the Lumberjack Landlord, own over 100 units, and just here talking about some real estate. So, and giving you my experience. David G. Hey, Matt. Hey, David G. Best way to soundproof between units, thinking of rebuilding garage behind small multifamily, but add a couple of smaller apartments on top. Want to minimize garage noise to units above. Great question. So I would do three things. And one is you're going to have to worry about fire code from the garage space to upstairs. So they're going to be required to use 5/8 sheetrock already. So what I would do is I would do three things. First thing I would do is I would talk to your town about what they want to see from a code perspective. Second thing I would do is the plan that I would use is I would use Roxel Safe and Sound product or some sort of a sound eliminating what's called bat of insulation. And that stuff is made out of volcanic ash. It's actually a really amazing product. Go and check it out online. They make a video of it, Roxel. But I would use their Safe and Sound product. I would put that in the floor. Then I would plastic in the floor joists. I would then plastic over the floor joists. And then I would spend the extra money and I would buy a product called Quiet Rock. Quiet Rock has one product now and they're coming with another one. It's an inch thick. It has a metal membrane in between. And so 1 inch thick of Quiet Rock is equal to 8 sheets of 1/2 inch sheetrock. So 4 inches. So it's essentially a 4-to-1 thickness, or 1-to-4, depending on how you want to look at it. So that's what I would do. I've used the Quiet Rock product. It is expensive and it is awesome. So yeah, I would do Roxel, then I would plastic, then I would use the Quiet Rock. You will likely then get no complaints. Will it be more expensive? Yes, but I guarantee that people will complain less with that stuff being in there because you'll hear a whole lot less sound transference for sure. And then the only other thing that you would consider is you'll probably want to upgrade any garage door opening system to probably something that's a belt drive instead of a chain drive. And why do I know that, do you ask? Because I had to do that research once. So, and the belt drive stuff is much quieter. In fact, I think there's one called like LiftMaster. So they have a couple of them where it runs from the actual center of the garage, and that's how it carries. The nicer ones are actual spring loaded on the edges. They mount to the wall, and then the thing is right there on the wall, so you don't actually have any of the overhead stuff, which is really nice because then you can put a light on top there, so it's a better lighting in the garage. So me personally, that's what I would do. Now, that LiftMaster lift is going to probably cost you 3 times what a normal one does, but you only need 2 of them. The Quiet Rock is about 4 or 5x more expensive, but sheetrock wise, it's much less than buying 4 thicknesses of sheets. And then also it's obviously easier to keep them up there because it's not like these, massive heavy tiles of 4 inches. I mean, imagine 4 inches of sheetrock, and this stuff's 1 inch and has the metal membrane. I think that's it. So yeah, my way of doing it will probably cost that project $3,000 more, maybe $4,000 more, but you're far less susceptible to getting complaints. Hopefully that helps, David G. James Welsh, when you buy above market and it's still a great cash on cash return, do you ever worry about the exit for the house? Yeah, cool. Yep. Buy now at 500K, crazy market. When you go to sell it in 15 years, it's worth 420. So no time in a 15-year period has something been worth 15% less. I do get your point though. So yeah, of course. And that's why cash flow is the most important, because what I'm buying is cash flow. So if somebody says, well, what if that guy next door, if he's able to buy it? Oh, cool. He's the man, my electrician. Awesome. Awesome. That's good. He fixed my problem. Electrician. So your question is awesome. It's a really good question. So generally speaking, yeah, I don't like paying $500 for an asset that I used to buy it 10 years ago for $300. Yeah, I hate that. However, my cash on cash return is greater at $500 than it was at the $300. Now, the nice thing is that the stuff that I bought at $300 10 years later is now worth 500. So I can do a 70% cash out refi. I get I get a mortgage of 350K on it. I only owe 200K on it. I get 150,000 bucks cash back. So that cash then fuels my being able to buy something else. But for me, it's really the cash on cash return. So I don't think so. To your point, yeah, 500K crazy market. Look at what stuff happened in 08 and 09, right? In Mike's market, Zuber's market, Fresno went down 75%. Well, guess what? They're all back to where they were priced at and higher 15 years ago. So all of them have more than recovered. In fact, most of that real estate took until about 2017, 18 to recover. And then the last 3 years has been increase. 4 years has been increase. So yes, that's a great question. Fantastic thinking of it that way. But for me, it's a cash performing asset. And so the only thing that I need to worry about is if my building is worth 420 and somebody can buy it at the same rate that I can, then their cost basis is lower than mine, right? So for me, I don't worry about that scenario because if 15 years from now, or even let's say 10 years from now, because never in the history of time has a house over a 15-year period been worth 15% less. In fact, the largest, when the market crashed in 08, it went down in 8, 9, 10, 11, and 12. Went down all 5 of those years. The largest nationally was 8.7 or 8.9%. And even though it was 8.7 or 8.9%, what was even more interesting was that the overall drop to the market was, I think it was 20 something. It was like 24 or 26% or something like that. And then in 12 is when things started to rebound. And then we had everything pretty much recover by 18, 19, depending on the markets. And then some drastically, go past that. And pretty much every market's far past that now. So for me, that's why we're talking about time in the market is better than timing the market. So my cash flow on that house at 500 is actually better than my cash flow on the other house that I bought for 300. Right. And the reason why that is because that rate being that much higher was different. Now, the only time that works is in a refi. That's why it's over time. That's why we always talk about the first 5 years sucking. In fact, Dion has a fantastic video on his channel about the first 5 years of real estate being really difficult. Mike and I talk about it. I mean, all of us talk about it because, yeah, the first 5 years are really hard. But yeah, over a 15-year period, I'm not overly concerned. No, not over a 15-year period. Over a 5-year period, yeah. If I had to sell, but I have enough assets that if I had to sell and they're only levered to 70%, I still have some that are levered much less than that. But largely speaking, my assets are levered to 70% loan to value. So even if the market were down 20%, I'd still have more than enough room to sell and actually still make money. But I just, at this point, wouldn't want to give up the cash making asset. So hopefully that helps. James, let me know. Chester Williams at Jeremy Kirkwood. Speaking of SALT, Matt, do you think we will see Congress restore state and local tax deductions for homeowners? No, I don't think we will. Nope, I don't think we will. I can't say anything more than that, Chester. Dancing along with rentals. No one notices if the kitchen has other things that pop. New floors, tops, sink and faucet. The cabinet hinges fade into the background. Yeah, just depends on. So I just disagree. Yeah, I disagree. I think that if you're rehabbing older cabinets, I think a beautiful, new, bright, shiny nickel or satin nickel, I think that makes a difference to people. I think people pick up on that quality. More importantly is, have you ever painted a hinge before? They usually look like crap and they usually perform even worse. So yeah, maybe that's something people do in C's and D's, but that's not something I do in my B's. And really even the C's that I bought, when I go and redo that kitchen, I'm going to redo it. I'm going to do it right. And that's what makes also our units fly off the shelves. Somebody looking at a new kitchen where it's painted and you have the jewelry of the beautiful new long bars, or you have the new hinges and things like that. Everything pops. You guys see my pictures. They pop for a reason. People are like, wow, that's beautiful space. Yeah, it's because everything there is new and well done. So yeah, I just don't, I think when you paint hinges, I think you're taking shortcuts, and I don't take shortcuts. So I'm in it for long term. But yeah, to each their own. If that's your model, all good. David G, could 800 square feet small apartments be heated with electric side-by-side heater, or gas always needed? Climate has winter, but not as windy cold as NH. Yeah, so you can do, I mean, so the big thing is like heat pumps now. That's a big thing in the more mild climates, heat pumps for sure. Or mini splits for heat and air conditioning. I just put one in a 2-bedroom, 752 square foot cottage or house on a lake. That's exactly what we just put in, because putting in an IBC boiler, they didn't have gas. Propane was going to be a pain. Where we had to put the heating system, that was an issue for space. So we just put a mini split in. So yeah, I think you gotta, that's where you have to talk to the, plumbing professionals that you're working with and kind of get their feedback on those. Yeah. Chester Williams, the BP video was a weekly David Green AMA video. So that question came up from a new investor who'd recently acquired a high appreciating property in a Class A neighborhood, and he saw he had low cash flow. Yeah. Okay, cool. Yeah. I don't like cash. I don't like specifically, I don't like A-class stuff. Yeah. Not for me. Not for me. Because then usually A-class stuff is also where you're gonna have your most competition from buyers. Either that or the C class. So yep, cash A class, not for me. DTL rentals, seller financing worked for me many times, but these were times when nobody was buying houses, different climate. Yeah, sure. Yeah, the seller financing works if they own it all the way outright, right? Yeah, there's a lot of scenarios, and that's why I think that you have to be, that's what I think makes you an elite real estate investor, is having strategies that work, as many strategies as you can, and that way you're seeing that you're doing one after the other after the other. My strategy for the reverse offer, I win deals and I'm not the highest priced. My strategy of, that's an advanced investor move, I get it. Mike Zuber didn't like it. I'm okay with that too. But my advanced strategy of how I work those deals is why I won those deals, and people not getting out of their own way and doing it the way that they insist on doing it, and the way that they think it has to be done, is why they lost those deals to me. I had the best deal on the table based on what the seller assessed. And so for me, it is very, very much more about understanding a strategy in a given market and climate that then you see success with. There's a lot of stuff, like there's going to be people doing bridge loans and things like that are going to collapse. They're going to collapse. I would not be doing anything short-term debt, bridge loan, anything right now. No way, Jose, not for me. Hey guys, if any of this is helpful, please hit the like button. We're just trying to get it so we can help Mike Zuber get to 1 million people helped. I'm happy to come alongside him in that goal, because we certainly don't do YouTube for the paycheck. Chester Williams, so he wanted to know whether it made sense to do a cash out refi and buy a high cash flowing property, do a HELOC on the property for down payment money, or sell it outright. Sell the high appreciating property specifically. Oh yeah, interesting. Yeah, I think selling. So I think selling for me is like such a personal thing, because there's so many other characteristics of the owner, the portfolio, the asset. And so I have a strategy, and my strategy isn't based on any one metric. My strategy is based on all the metrics holistically in my portfolio, what my goals are, what I want to do, how I want to. And when I say goals, it's not like, well, we're going to increase 20%. I don't make up fake goals like that. And that's not where my focus is. My focus is doing work daily and looking at good and great deals, and then trying to unearth value in those deals that other investors might not be able to unearth. Value investing. That's what I do. That's what I'm really good at. That's why my cash returns That's what my cash on cash returns, my yield, my return on capital, whatever way you're measuring it. That's why all of my stuff is in the 20s and higher. The only thing that I have that's double digit, like 10 to 20, is something that I've just refinanced. That's it. And even most of those don't even fit in that bucket because we only did 70% loan to value. Know thyself first. Good morning. Good morning to you, sir. Good morning. Crimson Knight. Haha. Yeah, I woke up to someone knocking on my door looking for the landlord who wanted to rent out the bottom unit in my duplex in Nashua. Yeah, that happened. Like it's crazy. We have people literally door knocking. Trent Shaver. Good morning. Hey, good morning, Trent. I haven't seen you on before, so super excited to have you here. Crimson Knight. Craigslist sucks in Manchester. 90% are scams. I have plenty of private Facebook where I find special renters. Yep, before I list them for the general public. Yeah, sure. Yeah, it's really finding about what works in your specific market. So I know for me in my market, Craigslist crushes. It absolutely crushes because we have a lot of students. We have a lot of grad students. We have a lot of young professionals. That's where they spend a lot of their time. Facebook, not so much. Not so much. Usually Facebook is older crowds, not people in their 20s, largely speaking. So yeah, Craigslist crushes for me. Yep, not an issue. Facebook also, yep, does well. But yeah, I want to advertise for free, and those two give it to me for free so far. So that's what I like. Josh Engen. In terms of renting on Craigslist, we have asked for potential applicants to fill out a questionnaire as a requirement to see the property. Weeds out the people who just waste your time. Totally agree with you. Yep, totally agree. Yep, if they can't answer back and just follow simple instruction of tell me about yourself, not interested. If you're looking for a place and need a place and want a place and you can't even follow simple instruction, you're not going to listen to me once you move in. Hard pass. So that's just the way I look at it. Keith Hager. Thanks, Matt. You're very welcome, Keith. Jennifer. Hey, Jennifer. No rustling today? Jennifer's son rustles. So good morning. Crimson Knight. NH Saves is not yet again my low income tenant. I might get me low income weathering. Yep. There is a fight in the Senate over where exactly the money is funded. Yep. Low income versus Energy Star, I think. Yes. One of them is on its last leg and service guy wouldn't touch it because it was so old. Needed to get 30-year vet out to touch it. Other than that, might be okay. Yeah. Yep. So LeChance Plumbing and Heating in Manchester is excellent. They have a bunch of, oh man, I thought I was getting caught up and then I hit the refresh button. Golly. So far behind. Yeah, LeChance Plumbing and Heating, I used a ton out there. They're fantastic. Yeah. Yep. Swapping out the old boilers. Yep. Energy program. Exactly. J Marky. Hey Matt, I'm going to be rehabbing a tub and shower. Okay, cool. What type of shower fixtures do you recommend that would be nicer than what is typical for C class? So here's the thing. This is one mistake that I think I'm getting asked a lot recently. And you guys, this is really important. The plumber to install a crappy garbage, lower end mixing valve and shower setup, it costs exactly the same to install it. Worse yet is when you're rehabbing the bathroom is when you want to do that the right way. So put in a higher end fixture. I promise it will be worth it. The difference between a low end fixture and a high end fixture is usually a couple $100. It's going to cost you that for your plumber to do the work. So what I would recommend is, for me, I like Kohler and I like Delta. Those are the two that I like the most. Kohler and Delta. That's what I'd be looking at. And then just stylistically what you want. I don't like chrome. I don't like gold. So everything for me is stainless or satin nickel. I have places that I renovated 10 years ago that people are still like, oh man, this place is amazing. It was cleaned. That was it. Things beautiful. And because we've picked higher end fixtures, we haven't replaced any of them. Literally none of them. We didn't replace sinks. We didn't replace showers. The ones that we replace are the ones that people just went to Home Depot or Lowe's and they bought something for $69 or $99. And that shower head looks like garbage after 2 years or 3 years, or the the pull on the tub pull in the diverter. The diverter is that pipe that comes out of the wall where your low water runs. That diverter a lot of times can be plastic, and so it will break or it will leak past, and because it won't give a proper seal. Well, then what do you have to do? Then you have to go out and replace that. Like, can you get one that matches the style of your shower head? Probably not. That means you're then going to upgrade both of those at that point. Then what are you spending there? It's like, just get something decent. Just get, a decent brand. Like I said, Delta Kohler. Those are the two that I use the most. Hopefully that helps. So I would not be delineating what I use from a product perspective on valves and such, or even lights in a B class versus C class. The real difference there is going to be, am I going to replace it with granite countertops and kitchen cabinets? If it's a C, will I just refinish what's there? In all honesty, guys, I'm probably going to put something nice in there and try and, even though it might be a C area, I can still get somebody that was in a B area that wants to go to a C area or what used to be a C class. I can still probably get them to go from one to the other and lower their rent, but then still gives me a great tenant. Because again, I've created my own ecosystem of renters. I have, students, grad students, undergrad students that rent, and there are 5 of them in a place, right? And believe it or not, I put new kitchens and granite countertops in those. Plenty of these kids going to college, they weren't all raised in bad areas with no granite countertops and no nice kitchens. They weren't. There's plenty of these kids that come from areas that their parents had nice homes. I want kids that are used to that stuff moving into my place, or even if they're not used to it, they recognize that it's that much nicer than everything else. That's why I get great market rents, fantastic returns, and I don't have a lot of turnover. When one of those students decides to leave, guess what? They find a 5th, or they find a swap for that person. So I have people that have been in places for 3, 4, 5 years during their entire undergrad and their postgrad, and they've moved in other people here. And yeah, they go through the process with me and this, that, and the other. But still, like, I don't delineate a lot like, oh, don't do this because it's C. Most of my stuff, all of my stuff is largely been in A and B class neighborhoods, and B class, like all brand new, because only brand new construction's A class. So a rehab isn't going to be that for me. So hopefully that helps. But yeah, I would not be changing out, like, use this type instead of this type, because largely you're going to get what performs. I used to go online and I would buy those nice single faucets, and instead of buying a Kohler that was $400, I would buy like a Xing Xing, and it was $100. And guess what? A year and a half later, I was replacing it, and it sucked. And what did I have to replace it with? I could replace it with another one of those. But at that point, like 3, 4, 5 years in, I'm behind the number, and I've had to do a bunch of extra work. So put nicer product in to begin with, and that's treated me much better. And the tenants like it. I want to make it a great experience for my tenants. I just do. And then they don't leave. I like it when they stay. Most of them. Oh, hey, Jennifer, have you ever used a rental agent for your units? And can you talk about why or why not? So Jennifer, great question, as always. Jennifer is our resident great question asker, much is Crimson Knight and Chester. You guys always ask great questions and a lot of questions. So very good. Kay Lore, I've never seen your name before, Kay, but I see that you're on here with a bunch of questions. So I'm very excited to answer all those for you. But let me answer Jennifer's first. So have I ever used a rental agent? Yes. Can I talk about why or why not? So why? It was only because of my daughter's diagnosis that I used a rental agent. I don't like using rental agents. Largely speaking, I don't think I think that they're not very good. I think that they can get, anybody in this market can get any unit rented. I just couldn't put hands on for folks. And then I found a way to do that. And I didn't. So I use a rental agency for 4 units this year. It cost me $7,000 in fees. And I have 2 tenants that are really good. And then I have 2 tenants that quite frankly suck. They text me all the time about completely inane things. Like this is a build to suit as they live there. Well, you'd really like to see that upgraded. Okay. Is it broken? No. Does it work reliably? Yeah, we just would like a new stainless fridge. Okay. Yeah. Wish in one hand and you know what in the other. Let me know which one fills up first. I'm not replacing a refrigerator that's not broken just because you want a newer, different look. If you want that newer, different look, you could have rented the other apartment that I was in competition with. I was $2,100. They were $3,000. You want to pay me $3,000? I'll get that stainless package ordered right away. Right? So I don't, so yeah, I don't like agents. I think there are some good ones. I think there's plenty of bad ones. And quite frankly, they never own the problem, right? So somebody looked really good on paper and they've sucked. They've been horrible. They've been a garbage tenant. They looked really good on paper. Yep. And they were like, yeah, we checked all their references, this, that, and the other. And I'm just like, this tenant bitches about everything, like literally multiple texts a week. So we started doing housing voucher tenants. They are about 10% of my, right now, they're about 10% of my portfolio. They are 80% of my calls. And we standardize our units. We do exactly the same stuff in all of our units. So it's just something I'm trying to figure out. I'm trying to figure out if that's an anomaly because they're newer to us, or what the deal is. So stay tuned. I'll be honest. I'll tell you exactly what it is. So yeah, so why not? I just don't think they do a very good job, largely speaking. Yep. I've had both of those tenants, because they were so expensive to place, literally $7,000 total. And then these two were probably 4,000, 3,500. They were probably about half of the amount. If I hadn't paid that huge fee, I would literally have just offered them out and said, you know what? I think it makes sense for us to move on. Why don't you start looking for another place? That's what I would have done at this point. So yeah, so Jennifer, I'm a control freak. I admit it. And controlling my business and how I grow it and how I run it is what's made me successful. Right. So yeah, that's kind of it for me. Crimson Knight. Okay. Makes sense on the boiler switching. Like I said, one of mine is questionable 15 years old plus, and the other is on borrowed time. And yes, he had less leg. One had to replace 4 parts. Yeah, that's what gets scary, right? Is that I had one where I did $800 worth of service to a unit, and then 6 weeks later it died. I was like, oh, but you know what? It got me through the hardest part of the winter. And we were able to then heat the house with space heaters until we got a new system. And this was years ago. We're doing that actually right now in the process. But we've talked to those tenants. We actually offer them another place. And they said, you know what, we're just going to move on, I think. I said, sounds awesome. Perfect. Great unit that they've been in for 8 years and they're just ready to move on. And totally cool. I'm ready for them to move on because the rent is going to go up about 45% after I finish the new heat system there. Jay Marking, Matt, can you explain the different types of windows, quality differences between them? And are there types that you won't use? Thank you. Yeah, sure. So I look for, not necessarily brand, but I look for low E argon gas windows. And that I usually look for the Energy Star or Energy Star Plus rating. A lot of towns will have a specific window that they insist you use, and they'll say it has to have this rating or better. So the only requirement that I have for a window is low E argon gas, Energy Star Plus, because I want to get that much nicer, right? That's number one. Number two is if it's in a busy area, I want an STC window. STC. Yes, an STC window, which is all of those things, low E argon gas, STC window. But then it has a special glazing on it that actually drastically reduces the number of decibels. In fact, whatever the rating is, 35, that means that it's going to reduce the rate of sound transmission by 35, I think it's 35 decibels if it's an STC 35. So in high traffic, busier areas, I will spend the extra money. It usually doesn't double the cost of the window, but it probably increases it 50 or 60%. And I will use an STC window. I have an amazing downtown building that is 1 block away from the most expensive building in the entire city. It's 1 block away. I put STC windows in there because I never want to get a noise complaint and I want people sticking around. And I know that what my cost basis is versus what that brand new building is, I can be 30% off their rent and I'm still 20% higher than what my rent would be on that same type of unit. So I'll spend that extra money. So my window bill, instead of being $10,000 was 17. $12,000 was 17. So it went from 12 to 17 because I use those 35 STC or STC 35 windows, which knocks the decibels down 35. Let me know if that helped you, J Markey. But yeah, low E argon gas, that's kind of built to a standard. And then I use, so Harvey windows, and then they just got bought by Lansing Building Products. I use their product because it's still all Harvey. And they built a good window. They built a good window. I don't spend the money on Pella or Anderson. Markedly more expensive. Pella is really much more for custom windows. So is a lot of the Anderson stuff. I think if you look at those two vendors, Anderson and Pella, I want to say that they own something like 90% of the window market, or maybe 92% of the window market between the two of them. But yeah, for me, it's low E argon gas, Energy Star Plus windows. Yep. And then if it's a busy area, STC 35 or better. They used to make these things called acoustic windows. Most companies don't make those anymore, but those were kind of the same thing. Or they would do what's called a triple pane window, which is a lot of what the STCs are. A lot of times it's a triple pane window with a glaze on it. And that will drastically reduce your sound, your noise issue. Yep. And then quality is just look at how the building is put together, or look at how the windows put together. You know, like the slides, how they're put together. Read reviews online for sure, because some of them are great. I mean, you can usually tell by how well it slides. Just have experience like touching some of those. So from my house, the windows that they put in here are outrageously expensive, and they're actually super unbelievable, awesome quality. I could never afford to put these in a rental because they're about $1,000 a window. They're completely overpriced. The windows that I usually put in are like $300 and $400. So I don't put in the $200 specials, but I put in like that 2 levels up from that, which are like the $300 windows. 3 to 4 now. Yeah. Kaylor. Hey, Kaylor. So like I said, I hadn't seen you before. I'm under contract 10 days, but welcome to the channel. I'm under contract 10 days from closing. Inspection came back with HVAC that's 22 years old. And the AC unit upstairs is not functioning at all. Yep, the seller lies on the disclosure by advertising 2 new HVACs. At this point, we are fighting for sellers' credits. Yeah, what's your impression? Yeah, so sellers are liars a lot of times. And this is what brings me to my strategy, which is I'll do informational only inspections. Somebody said that that was a deceitful practice. I disagree because sellers lie often. And they say something's new and it's not, because they're like, oh, I remember it being new. It's 6 years old. It's not new. Especially for something that might have a lifespan of 15 years, 33% of its life is gone, more than that, or 40% of that thing's life is gone. So, yeah, I think I work on the seller concessions. I mean, the impression that I would have, or the only thing that I would say to you is, because you're going to have to replace those, does that still make the number work? I would be, if you haven't already, I would have gotten quotes. I would have gotten 2 quotes for exactly the work that needs to be done, replacing out those systems. And that's what I'd be arguing about. But know this, you notified them that, and I would send them the inspection report, because then if you give them an inspection report, then they are on notice that what they said was what they said was untrue, number one. And number 2, and most importantly, is they're then on notice and they're going to have to tell the next guy in line, and, not necessarily a guy, but the next person in line, that is an issue, and that has to then be legally, that then has to be disclosed. So that's where you then say, but you're going to start the process all over with somebody else. That's going to cost you time, effort, energy, and you still have to disclose at the end of the day. So let's just get to a number that we can both agree to. That's how I would have that conversation. I did just have that conversation. I got a $15,000 credit on a $600,000 purchase. Yep. Yep. The person was like, oh yeah, no, the roof was done in the last 5 years. Okay. We found that it's leaking. If it was done, it wasn't done very well. And so regardless of what they said, they were like, well, yeah, but we was done the last 5 years. Not my issue. Your roof isn't warranted for that long. It's leaking actively, and you're going to have to disclose that to anybody. And then the other thing was we found some knob and tube wiring, which we will not allow in use in any of our properties. We will rip it out right away. So literally day one, when we close, we're going in there with electrical contractors to rip out the knob and tube. Yep. Day one. Yeah. So that's what I would do. I would just negotiate it hard and make sure that this is why the agent that you have is so important. They need to be negotiating that on your behalf, and they need to be able to say exactly what I just said, which is you guys are now on notice. You now have to notify any other buyer. And here are 2 quotes that we got for what it's going to cost to redo these things. This is not just belief from an inspector. This is factually they are not working. So you can service them to get them up and working and then have us reinvestigate. But if it's 22 years old, what are you going to do with a 22-year-old HVAC system? I have an idea. You're going to replace it. I would not repair a 22-year-old HVAC system. I wouldn't. Nope. I absolutely would not. I would be replacing it. Yep. So that's what I would do, Kaylor. Hopefully that helps you. Crimson Knight, HFS zoning will still be around. Remember, it's only for places that has water sewer. For city places and septic don't count. Yep. Yes, plus towns will find another way to I bet to stop it. Yeah, that's what it's true. But most of the, most of where you want to be, most of the neighborhoods, those aren't on septic. Most neighborhoods, certainly in our state, most neighborhoods are water and sewer because they charge those exorbitant fees. It's like, I think it's like $9,000. 9 or 15. No, it's 15. It's a $15,000 impact fee to hook up to water sewer. It's very expensive in our state, but it's because we don't have I don't have income tax. Might I actually be caught up? No, dang. At least I didn't get further behind. Okay. Let's see. Dancing alone with rentals. Single family zoning went out when families recognized that you could double and triple up and inspectors could not prove the number of people living in the home. Yeah, so obviously it's all state-based, right? It's all state-based. It's what those states decide that they want to do. Yep. Karen Molnar, hi, happy Sunday. Happy Sunday, Karen. Love the beard trim. Oh, thanks very much. My wife said exactly the same thing this morning. It was actually kind of funny. In your early years, did you have a mentor or accountability partner? Thank you for all you do. You're very welcome, Karen. No, I didn't have a mentor. That was something I complain about all the time. And that's the reason that I do these live streams for you guys. I can't hold you accountable. But if you ask a question, I'll tell you an honest answer. That was my biggest issue, is I didn't have a mentor. I had to figure everything out on my own. Rehabs, purchasing, banking, the right vendors. I had to figure, and I was young. I was 22, 23 years old when I was buying property, my first properties. So I just had to figure it out. That's why my first few did not go very well. It was like school of hard knocks. They went all right from a general, like the numbers were okay, but there were all the things that weren't on a spreadsheet that I didn't know, which was better qualification of tenants, what to do when they didn't pay, how to manage them when they didn't pay, maintenance. Like it was, so yeah, all of that stuff. Watch Dion's video, the first 5 years versus the last 5 years. Watch that video. I think that's a great video. I think he did a great job on that. Aside from all the funny sound effects in the beginning that make my kids absolutely crack up. Like, Daddy's so silly. Yeah, Daddy's silly sometimes. Yeah, Dion did a great job on that video. So watch that on his channel. I think you guys will really like it. But that talks about what the first 5 years were like versus the last 5. And like I said, there was no accountability partner. There was no business partner. There was no mentor. Even now, like, this is why I'm so concerned about giving my experience to you guys, is because if anything that I've been through can help save you time or money or a bad deal, I want that to happen for you. But again, all I can do is tell you my experiences, and hopefully it's helpful. And if it's not, then it's not, but hopefully it is. Yeah. Dancing low rentals, no more than 5 unrelated adults in the code there. Yep. I'm against that 5 number. I think I think if you would take cars off the road, if you could go to 6 or even 7, if the house has that size. Yeah, I don't disagree with you dancing alone with rentals. I think you're exactly right. I think that there has to be, what we know about government, right, is that government often uses sledgehammers when a scalpel is what's needed. And so I count on government to largely be stupid and make mistakes and broad sweeping changes that aren't what's best for the best, so what I always talk about, my money is the highest and best use. They've never hit highest and best use ever, right? They just haven't. They've never done it. That's why for me, I like things that are generally regulated, but not crazy. And that's why people find loopholes like tax code, right? This is how much the tax code is. And everyone still screams and complains about the tax code being unfair. Yeah, like I get it. I totally agree. And all you can do is not hate the player, hate the game. So I hate the game, but you have to find a way to leverage what the rules are in your favor. That's what our job is as investors. And I think largely if you do it honestly, I think that, the rest of the chips can fall where they may. And that's one of the things that I hate about some of these town rules, but I've capitalized on some of those town rules. The town next to us outlawed anything more than 3 people unrelated living in a house, apartment or single family. My life just got a whole lot easier because the most that they're going to get is 3-bedroom units. So 4 and 5-bedroom units are high in demand because it drops down the price per person, number one. And number two, that asset isn't available in that town because it can only go to families. And so in that town, that asset is worth significantly less than in my town, where I get that much more money because that level of density is allowed. Again, that's finding a soft spot specific to my market, one that I now understand and one now that I leverage to my benefit as often as possible. Chester Williams, LOL, the Zillow algorithm. Yeah, I know, right? Like these guys talking about, oh, now it's 16% is based on our algorithm. Hopefully the people that put together that algorithm are better than the people that put together your house buying algorithm. My guess is they're probably the same people. And my guess is it's probably going to be wrong. I just do not see how we get to 16% annual rate of increase by the end of the year. I just don't see it. I think rates are going to have a significant impact on that. Let's see. Chester Williams, never factor price appreciation into your rent model. That is correct. I never do. Ever. Yep. Ever. Dion, talk financial freedom. I think you should set up super chats too. Some of us would like to give back for what you share. Dion, I really appreciate that. And thank you for saying that, but I won't set up super chats. I make my money off of real estate. I want to help people just like you, Dion. Dion, super chats. You won't do super chats. I won't do them. Mike better not do them. I would tease him incessantly if he did. I don't want that for people. I cannot give you an accurate representation of any one topic for $5. I can't. I'm here to help. And that's what Instagram is really for too, is I really want that to help people on their daily journey. Like I want that to encourage them. I want them to give them food for thought. I want them to think about the experience that I just had, how they can avoid it, how they can overcome it if they're finding the same experience. That's what this is for. I want to just help people. I've spent far more money on doing this than anywhere near what I'd make by far. It's not even funny, but that's the point, is to give back. It's sacrificial. So I want to give back. So I appreciate that, DM, but yeah, no super chats for me. Jeremy Kirkwood, I'll accept the like button. If anybody's going to pay me, it's going to be Google. It's not going to be people. Jeremy Kirkwood, I have an AirDNA premium account. It is helpful for both long-term rental and short-term rental numbers. Cool. Yeah, I don't have their premium account, but something I'll probably look more into. Like I said, really what I use AirDNA for is to understand how many short-term rentals are in my area and watching the number of them increase or decrease, and then days on market and things like that. Because what's really funny is there was a blip in the on the radar when I want to say even though it was a short-term rental, after I figured kind of expenses and costs and all this other stuff, they might have been making $200 more a month than me. That's a lot of work for an extra 2 bones. That's a lot of work. So good for them. I'm glad that model works for them. They probably have the infrastructure and they can do it. Good for them. Not for me. Not for me. Yep, not for me. Cool. All right, Joe Hey, Joe. So Joe, I want to say that I appreciate you, Joe, specifically because I said something in a video. He came back and said that's not the experience that he's having right now. Most importantly, he had the street cred to say that wasn't his experience. And so I listened and I loved getting that feedback, because what it even further drilled down for me was that everything is really hyper local, and very, very specified. So I appreciate you, Joe. I really do. I'm very glad that you brought that up. And it was regarding margin on new cars versus used cars. I have some friends in the used car business, working for dealerships, and kind of that conversation and what we're seeing for those things. And so, Joe, what's really interesting is that's actually a question I have in front of my accountant right now is, what is my best bet at this point? Is it to, and this is what we're going to make a decision on for 2022. Is it better for me to buy a brand new setup vehicle, or should I still be buying used? Because I've always been a 5-year on the other side of the bell curve guy. And so that's a question that I have to him. And now, based on the business and expenses, I want to see what his feedback is, which is he might say, I was telling Ashley last night, he might tell me, go buy a brand new 2023, utility plow truck, which would just make me giddy, because the whole reason I haven't done it so far is just based on tax structure and value. So if he's telling me value wise to do that, that's what I'm looking forward to. So I appreciate you, Joe. So Joe, I'm going to roll with fixed 30-year debt. Okay. At max 70 LTV. Okay. I'm in the same boat. Yep. Any thoughts on commercial lenders that offer 10-year ARMs, allow you to pool equity and draw from it up to 80% loan to value, allowing you to get more? So my thoughts are this. I have some of those loans. If I could refi out of them and get 30-year fixed rate debt, I would. I do understand it. I do understand the idea there. The only thing that really scares me is I have no idea where rates are going to be 10 years from now. If we suffer the same thing that we suffered through the 70s and early 80s, that could really, really, really hurt. And yeah, are you 10 years off? You are, but you're even more exposed at 80% LTV instead of 70% LTV. So I could understand why somebody would do that. I could understand that somebody would want to do that and speed up the income snowball, Dion's quote. And I see there being an appetite for that. For me, that is not how I feel about things. For me, I want to do 30-year fixed rate debt, be more conservative. I'll be aggressive on the offer side and how I get a deal done, but I'll be less aggressive on the finance side of it. And that's what set me up for the massive win. In a 6-month time frame, I will have 2 refi exits that will net me more than $1 million on each one. So 2. That has all been used to acquire more real estate that is only a great or amazing deal. We're not even talking about average, good, great anymore. We're talking about average, good, great, and amazing. Literally deals in the 20s and 30s return on capital. So that's what I would tell you, Joe. I get it. I totally get it. It's sometimes it's like, what was it? I think it was Casino, right? Where the Izugawa had left on the plane. They blamed a plane problem. They brought him back. Instead of betting his 30 or 40 or $50,000 a hand, he was betting 10. And then basically, Robert De Niro, who's Ace Rothstein, actually says, can you tell I've seen this a few times? He actually says to me, he goes, he didn't look at it like he was winning $10,000 a hand because his hot streak continued. He looked at it as he was losing 20,000 a hand because he wasn't betting like he had normally bet. So then he went back to his level at 30,000. Then he hit a cold streak, and then he gave all that money back plus $1 million more. So that's kind of the same way that I look at this, is that I just want to be more conservative, and I want 30-year fixed rate debt that doesn't keep me up at night, because I still have exposure on 4 or 5 assets that are 5, 7, and 10-year ARM stuff. That's commercial that I can't get away from because I bought or I did a new rate and term in the last year and a half before non-QM lending was really available in a big way and more acceptable. And so I would have to pay a 5% penalty or a 4% penalty to get out of those deals. And on $1 million deal, I have to write a check for $40,000. Well, that's a lot of rate and increase, right? So I'm going to work with the bank because I think all totaled, that's probably, it's a 12 unit, a 9 unit, a 6 unit, and another 6 unit. So it's 4 buildings and a 5 unit. So it's 5 buildings. But the numbers I just took you to, that's 30% of my unit count, but that's on variable debt, 5, 7, or 10 year. And it all expires as little as 4 years from now. So yeah, on that one asset, but the income snowball that I have would actually help me pay that off aggressively. Yeah. So hopefully that helps, Joe. I'm sure you have those options. Yep. Have those. Yep. Yeah. So that's my opinion. I love it when I answer the next question. I didn't even read the next question. It's always good. I'm almost caught up. No, I'm not. Man, I hit reset. Golly. You guys are crushing it today. Crimson Knight, Amazon Basics Euro bar cabinet handle. Yep. 1/2 inch diameter. Yep. 10 inch length. Yep. 7 inch hole center. Yep. Polished chrome. I hate polished chrome. Yeah. So I buy the satin nickel ones, but basically that same one. Euro bar satin nickel. Yep. That's what I buy. Jernil Diaz, other than the awesome Three Amigos, what other YouTubers do you recommend watching? Analytics Ariel is pretty good. I've done some stuff with her. We're going to do more stuff again together. She's really good on the analytics side, and on the search side, I like her. She's really smart. She's actually a data scientist. She's been a lot of fun to work with. I really appreciate her. Yeah, I like working with her. I do. And her channel's small like mine. It's a little over 1,000 people. So yeah, if you go over and watch some of her videos, tell her the Lumberjack Landlord says hello. But I probably talk to her every couple of weeks. In fact, we're going to do some stuff together in the next few weeks. So that, Mark Kohler, if you want some good strategic accounting advice, I like his stuff. Who else? I don't really watch Meet Kevin anymore. Graham Stephan, nope. They're older stuff, like Dion says, kind of anything older than 2 years. As far as other real estate guys, yeah. I don't know. There aren't really a lot of other real estate guys that I watch. I watch like topical on big topics, on bigger pockets. Like if there's something that I want to learn about, sometimes they have some stuff there. A lot of that stuff though, I kind of, I don't know that some of it is right for brand new investors or newer investors. So try and think. Yeah, I think that's pretty much it. I'm trying to think of who else I watch for real estate stuff. I watch Matt the Mortgage Guy for mortgage stuff. I watch him. Yeah, I think that's it from a real estate perspective. Trying to think who else. Oh, Pace. I watch Pace Morby stuff. Not all of it. He's awesome, but I just don't have enough time. And so I really focus on my core stuff. But sub 2 is definitely Ryan Nickel, and him is definitely definitely people that I'll watch more of for sure. Let's see. Kip Stevens, have a rental that I rented to a single tenant. Okay, he moved in his girlfriend, 2 kids. They had an ugly breakup, big surprise. And he is that's what I said. And he is no longer living there and unable to find him. Now I have her and the 2 kids. Yeah. Is she paying rent? She is unable to afford rent. I just scrolled down to see. Yeah. Have I been through that before? Yeah. What is your advice on this and your next step in California? Geez, Kip, I don't know your state laws. I know that they're kind of tough on evictions. My state's not, because my goals are aligned with my state's, which is they want my tax revenue, which comes from property taxes. And I want to be able to, and I can only pay that state tax if I am actually getting my rent paid. What I would try and do, honestly, I would ask Zuber that question, because he knows the laws in California far better than I do. My initial inclination, not having done it in California, if it were me, based on my laws in New Hampshire, I would post a demand for rent notice to quit. I would also consider, I don't know what your program is out there like for the COVID program, but we do have a COVID program here. They've actually run it very, very well. They've actually deployed the money very, very efficiently. I had an appraiser laugh at me about that. And I said, I don't know why you're laughing. Look at the state statistics. He was an appraiser from another state. He was the one that I was so peeved at that you guys should watch that brrr video. That brrr video is all about appraisers, really. I might need to change the name of it. I was thinking about that today. But he was laughing at me. And I was just like, I don't know why you're laughing. We've deployed like 60% of that capital. You guys have deployed like 16%. You guys are starving landlords out and not helping them, and just keep on telling them, oh, help is on the way. I was like, because he was talking about how, Mass is so efficient. And I was like, no, they're not. No, they're not. In your head, they are, but you actually haven't seen efficiency until you've been to New Hampshire. So we are all about it here. So anyway, yeah, that's a tough one. If I were in your shoes, I would post demand for rent, notice to quit, because that then gives her what she needs. I would communicate with her. I'm going to post a demand for rent. I'm going to post a notice to quit. And here's what you need to do with those. Take those to these agencies and see if they can give you emergency rental assistance. If they can, great. If they can't, then she's going to have to leave and find a place that's more affordable. That's what I would do. In my state, based on my rules and laws. So all I'm giving you is, I don't know what your state rules are, I don't know what state laws are, but if you can put yourself in a position to be the catalyst for her being able to get onto a program that will save her, get you saved, get her saved, then that's probably best. Because my goal isn't to ever evict anybody. But at the same time too, I do have to get market rents and have the place taken care of. I do have to, and it's only going to get worse from here, I think, is affordability and her getting further behind on rent, I think, is probably your issue. Crimson Knight, do you have a product for outside door hinges, or do you recommend I switch to hinges attached to the inside of the cabinet? Yeah, so Crimson Knight, this is one thing I will actually go to Home Depot to test out and look at. Take the hinge that you have, bring it to Home Depot. They have a huge wall of hinges, and just look and see which one you like there style wise. And then also where you need to get your fit and fitment for the door. So look at that there, kind of test it out, make sure the hinge and everything looks exactly the same. Then once you find that, just look and see exactly what that hinge or hinge type is, and then look for it on Amazon with the right offsets and all that other stuff. That's what I recommend, because it's really funny. Home Depot often will have like 8 or 10 hinges. There's 50 in a kitchen or 40 in a kitchen. Like 8 or 10, what's that do for me? Nothing. But I would look at that. That way you can touch, feel it, see if you like the quality of it. And then I would just take those measurements, and then I would apply and look for something that online. That's what I would do. again, it's just such short money. It's a little project. It might cost you 50 or 60 bucks for that stuff. And it's going to be a world of difference. It'll make everything pop, especially when you're having a nice new handle on the door. You want that to match that handle. So obviously same finish. So, one will be satin nickel. The other should be satin nickel. That's what I would do. That's what I would do. Okay. Do you use bigger handles for the drawers? Yes, I do. Yep. What is that alert? Oh, couldn't care less. Okay. So yeah, use bigger handles for the drawers. Yeah, I actually like the more grand. So even if I have a 32-inch cabinet, instead of putting like a 6-inch pull on it, I'll put a 10-inch pull. I just like the more grand and if I have like a 36, like it's a tall cabinet, I'll put a 12-inch handle on there because I want it to be grand and big and it's an accent, it's jewelry for your cabinets. I like that. I like that look. So, and people seem to like it too. Chester Williams, I wholeheartedly agree that the three amigos of FI about the first 5 years, specifically waiting on the income snowball to kick in. Yep, for sure. Is tough, but building up the discipline of not spending. Yeah, totally agree with you, Chester. Totally agree. Discipline of not spending. Unnecessarily spending unnecessarily while saving up for a down payment allows new investors to get to financial freedom quickly is less than 10 years, like Dion says at the beginning of his video. Yep, exactly. Yeah, it really is. We look at it and, people have done it in 5 or 8, but really 10 is pretty possible. So yeah, I agree. Joe Gentili, it's really helpful. We appreciate you, Matt. Oh, I'm good. That's good, Joe. I'm glad. Hopefully, yeah, I'm glad that did help out. Awesome. Yeah, there's a lot of opportunity out there to get cash right now. And you just have to be really, really careful about what that means you're going to owe them in the future. 5 years, 7 years, 10 years, they can call it when you hit certain criteria. Same thing with my bank. My bank doesn't want to own a bunch of my property, but if I'm hurting debt to income and they believe the asset's undercapitalized, they can technically, they can put you in what's called technical default. But the way that I have it worded is I have it worded on my entire global portfolio. So I'm like, well, that's fine, but I don't want you to do that on one asset. You need to do it on the entire portfolio. So that's what's really cool is it's based on the entire portfolio. And so that helps me, right? With my portfolio with them is I just have to make sure. So they actually raised it from 1.2 to 1.25. And so I'm over 2. So but any one particular property might hit 1.25, but I'm over 2. That's why I want properly capitalized assets. Legacy Op. Hey, good morning. Good morning, Lumberjack. Appreciate you. Thank you very much. Appreciate that. Chester Williams at Josh Engen, brilliant low-cost way to weed out time wasters with the questionnaire. Absolutely. Yeah. It's just like for me, I did the questionnaire thing. What I found is that I missed some decent tenants. So when I did it where I just basically gave them something really easy that anybody could do, hey, just write me back and tell me a little bit about yourself. That I was getting better results with. Yeah, I was just getting better results with it. So I think do something there that creates action on their part other than, is this available? Yeah, as far as you know. Yes. Jennifer, we did have wrestling. We were done early, straight bracket, no round robin. Oh, very cool. Awesome. That's awesome. Hopefully he did well. Crimson Knight 921. I don't think that works for C in Nashua or Manchester. Granite and new cabinets are overkill. Yeah, I'd agree with you. Yep, for C in Nashua and Manchester. Yeah, so Nashua and Manchester, for those of you who don't know, that those are cities. Those are over 100,000 people cities, and that clientele is rougher on assets, and there are a lot more C-class neighborhoods in those cities. In my cities that I do business in, there's literally, you can rank the C class stuff down to like a few blocks, everything else. And then, people are always like trying to invest in those C's so they pop to A's or B's, I mean, and I think that they will. There's a couple of major projects going on in those cities that I think is going to pop. It's probably going to bring everything up into the B's. I think that's my thought. So yeah, cool. Quality paint cabinet job. Yep. New hardware and butcher block makes it better than 90% of the other C class. Yeah, totally agree with you. Yep. And then just over poly the butcher block, just poly the heck out of it for sure. Yep. Crimson Knight. I think all in all, it would cost be 2 to 2.5 DIY cabinet with high quality paint, HVLP sprayer and butcher block. Do your cabinets and countertops would be 15K based on your Instagram. Depending. Like the kitchen that I just did, was massive. You'd have a hard time finding a kitchen like that in any apartment. That was a house. That was a massive kitchen with a huge U shape to it and a cabinet on the other side of the stove. That was a massive kitchen. Normally, a lot of the kitchens that we've been doing that are more reasonably sized, more apartment sized, cabinets, counters, everything, install, pulls and all that stuff all in is running about 5,000 or 6,000. So it's probably twice the price. Yep. I mean, if the area is okay enough and you think you can get some people to live in that area that might be normally have lived in a B class area that are willing to go to a C class area to get something that much nicer, then it will make sense. If not, it won't make sense. My kitchen is slightly bigger than the one you showed. Which one? I showed 3 kitchens. So one of them was 12 grand all in, but that kitchen's massive. That kitchen is 8 feet this way, 10 feet this way, 4 feet, 4 feet this way, stove, and then another 2-foot cabinet over here. And that included Lazy Susans, which Lazy Susans are about $600 a piece as opposed to closed cabinet at the end. Closed cabinet setup you can do for about $250. Lazy Susans are about $600. So they add 10% onto the cost of the kitchen cabinets. Nothing to the counters, but they add 10% onto the cost of the cabinets because Lazy Susans are so expensive. There's such massive boxes plus the internals for managing them. There's a lot there. Yep, a lot there. Yeah. Chester Williams, Karen Molnar, accountability partner is great for achieving goals in general. Great question. I agree, Chester. That was a great question. I just didn't have one, which probably didn't help me. Jay Markey, how do you handle tenant requests to modify your properties? For example, installing satellite dishes or mounting TVs on walls. Mounting TVs on walls, I would do that. I would tell them, yeah, we can mount a TV on the wall for you. That's fine. So I would do that. But I tell them that the mount stays because it's now a fixture. If something is installed with screws, it's now a fixture. It stays. And then satellite dishes, ironically, Dish sucks. I have never gotten a call from them, and I just showed up on one of my properties and they screwed it into my siding. Trust me on this, they're getting a note. I don't like satellite dishes. I don't care if it's a little bit less expensive for the tenant. I don't want that monstrosity putting on the side of my building so they can get the right signal, making my building look like, ghetto. It absolutely unacceptable, especially when I'm not even notified or asked. That's my problem. And then they just go ahead and screw it in like they know what they're doing. They just put these massive lag bolts in the side of my building. They don't care. Don't do that. Yeah, it's still my building. You rent from me, it's still my building. And the problem I have is with the vendor not saying anything and the tenant just deciding that was okay. It's not your space. You don't own it. You pay rent to live there. That's my feeling on it, Jay Markey. Jeremy Kirkwood, rental managers do not vet renters if they were a prospective homeowner. That is why you're getting all of the annoying calls. I have one like that. She calls me frequently. I doesn't understand. Yeah, exactly right. Understand what a house is and how to keep it up. Yep, agreed. Crimson Knight 921. How much do high efficiency windows matter on these very old 1800s, early 1900s houses built with zero insulation? Well, I always insulate those houses. So I will always have the siding pulled from the outside. If it's clapboard, I'll always have that siding pulled, and then I'll have it ported, and then I'll have insulation blown in, and then I'll do the hard pack insulation. So it matters a lot because I want to fix that entire envelope. So yeah, it matters a lot. I don't leave them as no insulation because you'll never keep that tenant there. They'll stay in poverty because they won't be able to afford the heat bills. So we always fix that stuff. Keith Hager, in lieu of repairs, discount at closing, not more than 3% of loan net. Yes, that was probably back on that other question for K Luan. Yep, I agree. Yeah. Yeah, if you can get them to agree. I think the bigger issue that you were having was you weren't getting them to agree to pick up anything of it. That's the bigger issue. Yeah. Chester Williams, I recommend to everyone never split the difference. Negotiating is if your life depended on it, by Chris Voss. Yeah, Chris is a smart guy. He's a good negotiator too. Yeah, I don't split the difference. Oh my goodness. So I've done enough deals where we've had to get creative on. I mean, the other option is you walk away. I walked away on one deal. That was the one that I got 15,000 on. They came back at 10 and I said, if it's not 15, we walk because you're nickel and diming me. And I showed you the quotes where it was going to cost 16 to do the work at a minimum up to 22. I'm not even making you pay for all of it. And every other person is going to make you pay for any of this stuff that needs to be done, the roof and the knob and tube. And so they literally came back within 2 hours and said, all right, we'll do the 15. Okay. So that's fine. You still have a deal. Jay Markey, thanks for going into detail on my window question. Yeah, no problem. There are so many different companies and I had no way to tell which ones were good quality. Yeah, absolutely. Yeah, appreciate it. Thanks again. You're welcome. Yeah, low E argon gas is one of the best ways. And then just making sure you're putting your hands on it so you can slide it up and down. If it sucks brand new, it's only going to get worse. It's only going to get worse. Julie Anderson, good morning. Another beautiful day in Puget Sound area. I'm sure that's awesome. Hi, Julie. Good morning. Crimson Night 921. What didn't you know when you started was West Manchester? That was part of it. Pearl wasn't West Manchester, but still sucked. Yeah, I didn't like Manchester at all. It was just not a fit for me. The 37 building inspectors, the certificates of compliance every 24 to 30 months, the clientele of tenant, a very high majority of them are, what's the right, like class C, a high majority of it's class C. Even when I made properties Bs, it was still completely lost on people. And these were, stuff in nice, one building was in a great area. So yeah, it's just not a fit for me. I did a bunch more work and came up with Dover, and that's where we're crushing it. We've been crushing it for 15 years. Anna K, I am enjoying listening. Thanks, Anna. I appreciate you popping a question in there. REI Stoners, hey guys, do you know if lenders look at medical debt like credit card debt? I do. Yeah. If you have outstanding debt, there is still a factor for it. There is a factor for it because they figure, especially if it's bringing down your credit score and what your payment is, it's better to have a payment plan worked out with the hospital, or worked out some way where you have a payment plan where they can understand what your monthly payment for that is. Because if it's just a gross number, that's going to hurt your score even more. So yeah, I would just make sure you have some sort of a payment plan in place of what you're paying. James Wells, thanks for all you do, Matt. You're welcome, James. You are one of a kind. Much appreciated. Thanks. My wife thinks so too. I love my wife. She's the best. So fun that we do date night together on Thursdays. I think we're doing it again this Thursday too. So yeah, we'll do Mr. and Mrs. Lumberjack this Thursday. But appreciate you saying, James. Jennifer Media. So I'm creating a new buy box for multifamily because single family return on capital is garbage in my market. Love hearing that. I mean, that you're creating a new buy box, not that it's garbage. I've never looked at multifamily. I'll be calling lenders and appraisers next week to understand that better. Yep. But how do appraisers generally find the value on these properties? Is it cash on cash return model or comps? So it's still comps. 2s, 3s, and 4s are still comps. They will take two approaches. One approach will be comps, which is most heavily weighted in my market. The second is the cash return, the cash flow. That is certainly part of it. But be prepared when you go to buy those that you might be buying an asset that's drastically undervalued and under rented. So you might be looking at something that's like a duplex for $300,000. Both sides are rented for $1,200 a piece, and market's actually $1,800. You're going to be sitting there trying to push the bank to say, hey, listen, we get it, it's $1,200 now, but market's $1,800. That's where I always use the housing number as my base. And I say, listen, guys, market's 18, but if you don't believe me that market's 18, the housing authority says it's 16. So let's just use that number. That number 16 is guaranteed over the 12. And that $400 gap on each unit, that's $800 more. Well, that necessitates 70, 80,000, 100,000 bucks more in price. That might be how you bridge that gap, but largely it's driven by comps and then helped and supported by actual cash flow and then proposed rents. That's usually what they're looking at the most. Anna K. Single family home under agreement has an unfinished detached garage with upstairs. I will finish it to be a studio apartment, ADU, meter is not separated, no by zoning. Any suggestion for utility split to rent ADU and the main house on the same meter? There are meters out there that meter usage. I don't use them, and so I don't know how they work, so I can't talk about them. But there are things out there that separate that. That might just be one of the things that you just have to suck it up and take the electrical costs. That is usually what I do. I wouldn't spend, $10,000 to separate them. You could. I wouldn't use 10,000 bucks to separate them immediately. I would see what those other processes look like. But yeah, largely what ends up happening is if I were doing it, because I kind of embrace construction. So if I were doing it, I would get a number from an electrician and talk to the power company about giving me a second meter. But that usually means you then have to upgrade the masthead, which is the part that comes up past the roof line of the house. And then it's the rounded part. That's the masthead. So you have to upgrade the mast to go past the top part of your roof. You then have to move the masthead, upgrade that. And then you're going to still have to run line either underground or across to that unit. All those things are doable, but I would just make any decision based on getting all the numbers in, because if adding that unit might be an extra 75 bucks or whatever a month in cost, look at meters so you don't have to separate. If you can actually meter it separately, I don't believe you can. But I think that they do have some products out there like that. I just don't know how good they are. And the other thing that you can do too is you can just say, hey, it's your fixed cost for electric will be 50 bucks a month. So you just build that into the number. That's usually what I've done. If I have combined utilities, is I just have to look at look at what the last year was. That's the best I can do. And that's just a little bit of this, what it is, what's that wind, which direction that wind blowing. That's the best advice I can give you on that, Anna. Crimson 921. I just got a call yesterday from my lender begging for a refi, trying to push an arm. Yeah, we're going to get a lot of those calls in the next few weeks, I think. Yeah. Arm, keep my rate at 3 and pull equity out. I laughed. Yeah, no, stay where you are. Yep. Joe Gentili, Matt, you remembered our car biz talk? Of course I do. Yeah, guys. So I read everything. And if we've had interaction, I think you guys have seen, I can remember your name. I really appreciate you guys. You guys are a part of the fabric of my life. And so I want to help you guys any way I can. And so when you raise a problem, I want to talk to you about it. I don't have the same problem Zuber or Dion have. I only have a couple thousand people that subscribe to my channel. So they have a lot more people that watch them and subscribe to them. And that's totally cool. I'm not everybody's cup of tea, but I'll tell you the way it is. And hopefully my experience can help you guys avoid some of your bad experiences. And even take some of it to create a better direction for yourself. I'm taking off, take my kids bowling. I love it. You're the man. Oh, thank you. I appreciate that. I used to be a big bowler and then I ruined my hands. This middle finger and I broke this thumb. So this is a straight thumb. This is my other thumb. kind of has a wonky wave to it. Doesn't fit in bowling, doesn't pop out of bowling balls like it used to. This one was for hockey, and this one was for stupidity. I lifted a trailer off of a hitch in the freezing cold, and I lifted it up, and then it was wet and freezing outside, and it started to slip out of my hand. I went down to grab it, and my hand got stuck in the chain, almost like sheathed my finger. Yeah, duct tape works great. John Doe, you're a saint. Gurus would charge a fortune for a fraction of the in-depth info you provide. I appreciate that, John. We'll have a course too soon. I just have to get the time for the course, and I'm not going to take time away from my family to do the course right now. So I'll just make sure to keep on doing these 3 hours on Sundays, and making sure you guys get a chance to ask questions. So appreciate you guys. Jan Santiago, are you ready for the Super Bowl today? The stadium is amazing. That stadium is amazing. It is amazing. I'm calling it here. I think it's the Rams. I think the Rams crush them. That's just me. That's just me. Keith Hager, Chris Crone for newbies. Okay. Chris Crone. I know Chris. Dude, that guy's just a million miles an hour. He's a beast. I like him. I like him. Yeah. Yeah. I'm trying to think. I do watch some of his stuff. I don't watch a lot of it. I watch some of his stuff though. I'm not a big guy on syndications. I like Grant Cardone. I think he's entertaining too. I'm not a fan of syndications right now, and a lot of those syndicators. Yeah. Tom Kine, what's bad advice? Really, the TAMs. I don't know what the TAMs are. I just saw really bad advice. Rams all the way. Oh, oh, the TAMs. The Rams. Yeah. Yeah, I think the Rams crush them. Sorry, guys. And I like Burrow. I like Burrow. I like the Bengals. It's nothing against them. I just think that, having watched the Rams in the Super Bowl against the Patriots. So I'm from Boston, Patriots. Sorry, way it goes. I would say probably more Tom Brady than Patriots, because we died for decades without him. But you have no idea what Von Miller, with the push that Aaron Donald has, you have no idea what that's going to do to that offensive line. I think Burrow is going to be eating some serious turf tonight. And because it's not about the Rams offense and Matthew Stafford, even though they're very good. I think it really is Aaron Donald. Aaron Donald is like the modern day Lawrence Taylor, different position, but changes the game that much from a defensive position. So anyway, that's my football talk. That's my football talk. All right, so let me just get to the last of these questions. Yeah, Chris Crone for newbies. Tom Kine, that's okay that you're late, my man. The recording will be up in about an hour where you'll be able to keep on trucking and listen as you go. Tom is one of our frozen chosen truckers. Love these guys. They work hard to keep our store shelves stocked. And I have a lot of respect for truckers. That's a hard life. And I have friends that are truckers and they're away from their families. So I respect you guys a lot and I appreciate you. And so least I can do is give you guys a few hours of fun content. And I always try and read who asked the question and what the question is. So people that might not be able to watch or actually and read are actually still able to hear it. So I like to do that for you guys. So appreciate you. J. Markey, Matt, do you deduct from security deposit if you have to replace a major appliance in a unit? It depends on why I'm replacing it. If a fridge stopped working, if a stove stopped working, I would probably have a maintenance guy come and take a look at it and then tell me why it stopped working. Fridge, it's not their fault. Stove, it could be their fault. Dishwasher, it could be their fault. They could be like, oh yeah, it's all clogged up here in the bottom. They weren't cleaning off their dishes before they put it in the dishwasher and then they didn't clean it afterwards. So it's not a guarantee either way, but it is something that I consider for sure. Yep, it's something I definitely consider. Crimsonite, the 12 grand one, about the same amount of countertops. Yep, but slightly more cabinets. Yep. This kitchen services a bedroom, so it's big. Okay. Yep. Yeah, I mean, if it's that size of an upgrade, yeah, if you can do that for 2 to 2.5 instead of 15, yeah, no brainer, especially C-class area, 100%. No code on. So what did I miss? Dawn. Dawn, it's about 2.5, 3 hours of info, but that's all right. It's there for you. Crimson Knight, a 4-bedroom that is 1,600 square feet. Yeah, that's huge. Yeah, that's huge. Yep. Yep. Yeah, I would redo those. I'd redo that for 2 or 2.5. And new cabinets or new pulls, new hinges, especially in a C area. Yep, I would for sure. The goal for this single family that I just redid, we rented it out because the market was insane. As you guys know, this is my only single family that I own. We rented out because the market number was absolutely insane. After they're gone, we will likely, depending on what the market is, we'll likely list it and sell it. The only reason we didn't was because we still have 30-year-old debt. We have no debt on that property. We're finally levering it up, but we rented it was a 3-bed, 1.5 bath, and rented it for $3,300 a month. And I don't own it. I don't own anything on it. And the taxes on it, it has a weird tax bill on it for a couple of different reasons. I won't go into all the detail, but the taxes on it are like $2,500 a year. So they're like $200 a month. So yeah, so I make $3,000 a month on the property. Yeah, I'll hold it. If I can rent it for that, I know that when the market adjusts, it's probably not worth more than 2 or 22. And I'm going to be levering it up with debt, 70% loan to value. So I'm actually going to take that. I'll be taking that money. Yeah. Yeah. Matt Bittner, do you think higher interest rates will contribute very much to rent appreciation? Yes and yes. I think so. Rents always follow housing eventually. And so we didn't really see a bunch of rent appreciation until like the last 12 months, but housing's been going kind of nuts for the last like 2.5 years. So I think rents continue higher this year. I think worst case is plateau or get a little bit flatter or not increase as much. CPI still says it's like 4% of its rents, 4% rent increases. What are you, nuts? And so, yeah, so I think rents continue to drive higher this year. I think they probably are even higher next year. And it wouldn't surprise me at all if they start to plateau. Wouldn't surprise me at all if they start to plateau, which I'm fine with. I mean, that's the beautiful thing about a 70% loan to value or having a mortgage on a property for some time. I've got some properties that are paying me, $2,000 a month, but my principal, interest, taxes, and insurance, my pity payment hasn't changed more than 10% in the last few years, in the last 3 or 4 years, but rents are up 40%. So it's just that much more. Yeah, that much more money. Chris Miller, hey Matt, checking in late. I see how it is, Chris. I answer your questions online. You can't even show up time for my broadcast. I'm teasing, Chris. Just joking. Hey Matt, checking in late. Weekly thank you for what you're doing. Oh, I appreciate that. Just got a contract with Off Market. I love that, by the way. I saw that. Did you see my response? Did you see my response? If you look, I think I was the first one to respond to your deal, maybe the second. And that's just lucky timing, by the way, because I can't do notifications because I usually have a kid tackling me. In fact, I can hear them out there now. Let's see. Got on contract with an off-market deal. Yep. Excited for finally getting my third. Yep. That's awesome. It's interesting how appraisers value 2 to 4s, isn't it? I've seen a quad sell for 325 when the same exact street as a quad that sold for 650. The biggest inference was obviously income. That's absolutely true. Most appraisers do not count income as much as you think, though. That's usually a secondary calculation for them. It's usually a secondary calculation. Yep. Yep. It's usually a secondary calculation. Can you hear my kids out there? They're going nuts. Yeah, going nuts. Anna K, thank you. You're welcome. Kenny Kim, join late. Good morning, Matt from California. Good morning, Kenny. Happy to have you here. Tom, bad advice. Don, Rams all the way. Appreciate that. Yeah, really, Rams. Yeah, I'm just telling you, they're not used to Aaron Donald. I'm telling you, Aaron Donald is going to spend a decent amount of time in that backfield, or he's going to be getting triple teamed, and Von Miller is going to be coming up through the middle. I'm telling you, that's going to be the toughest thing they're going to have to deal with today, I think. I used to be a big time gambler. Not anymore. And it wasn't because I lost a bunch of houses. I just stopped gambling. I was really like, this is taking up too much of my time. So the only thing that I do is season long prop bets. And this year, because of Eliana's diagnosis, I didn't have time to place my bets. They all ended up being actually pretty good, but I'll do season long bets because there's less undulation in what happens there. And I think I'm 13-1 in my last 14 season picks. And it's usually almost always one of them is for the Jaguars to lose, be under the over wins total. Yeah. Stupid Denver traded. Yeah. Von Miller. Yeah. No kidding. Yep. Yeah. Von Miller going to the Rams is a big reason why I would pick them. Kenny Kim, I just listed a rental property for a new tenant. Matt, how long would you wait until lowering the rent? Wait for another week or two? If you just listed it, I would give it a couple weeks. Yeah. Yep. I would give it a couple weeks. See what traffic you're getting. Also, go back and look at what some of the comps are that you're running. Like look at some of the other stuff that you were tracking and see how that stuff compares. That's what I would do. Julie Anderson, time to go buy some keypad locks. Have a great day. Count your blessings. Always do, Julie. I appreciate that. Yeah, keypad locks are the best. We just did a bunch of them. Chester Williams, as a Ravens fan, I'd want to see the Rams win, but the Bengals might find a way to pull this one out, kind of the cardiac cats. Yep, from a few years ago. Yep, it's the Chinese New Year, year of the tiger. It's true. All those things are true. Gerardo Gutierrez. Hey, Gerardo. I've not seen you on before, but I'm super excited that you're here. On the 40-year loan from the other day, yep, I can get 4.375 on an investment property cash out refi. Do you think rates will go up in 2 months? Should I get my money now or after I complete my ADU? Yeah, that's a problem. So I just did a project that wasn't really all done. And so I'm right there in that same boat with you. I don't know. I truly don't know. I truly don't. If I knew, I would have known what to have done in my case, and I couldn't come up with what to do in my case. This is my sister-in-law, who I adore. She's the best. But she's so funny. I was like, yeah, please text me. She goes, everything okay? Yeah, I'm on my live stream. You're not watching? Whatever. She was the family member where the renting went just fine. So yeah, so to the answer to your question, she goes, sorry. So the answer to your question is, I really don't know. I think rates are going to be higher. They could be markedly higher. I mean, if you get a 50% rate hike, rates are going crazy. They're going to be 4.5, 4.5 plus, I think. So what I did in my particular case was I have two. One I did the refi on, even though it wasn't 100% done, I did the refi on it. And then another one that was the one that has the ADU, I did not refi. I still have that active. I didn't refi it. I'm still got the original mortgage on it. So that's what I did. Tom Kine, boo Ravens too. Yeah. And I live in Maryland. Thanks, Matt. Respect back. Appreciate you, Tom. Cassie Ironman, you're awesome. You gave me some input in the ORAT Facebook group regarding my cash out refi troubles. The CA area I live in is tough to find a sub 300K property. How much can I do? How much can I do with 70K? Oh, you're welcome, Cassie. I'm glad that was helpful. How much can you do with 70K? So worst case is it can be the building block that you're building on top of to get your next deal done. Yep. Yeah. So if it's not 300, let's say they're $400,000 properties or $500,000 properties, right? You're still 70% there. If it's a $500,000 property, you need 20% down. If you're going to do a house hack and move into it, we can get in for 3.5 still. So just because an activity doesn't create enough to buy the next one doesn't mean it's not the right activity, right? So if you have 70% and a typical duplex is 500K and you have to get 20% down, right? Then only having to save up 30 as opposed to the whole 100 is typically worth it. Are you going to have some more burn on your house that you refied? Yes, certainly. If it's your personal house, then yes, that's a burn out of pocket, right? But if it's a rental property, then your rents should still be covering that. It's just less profit in your pocket, so it's costing you money. But then get focused on, hey, I got 70, I got 30K more to do. What's the other stuff that I need to do to get that next 30 so I can be the buyer at that next 50? Keep in mind, I am going through a refi. I will have 7 figures sitting in an account. And this isn't to boast. This is to tell you what I'm doing. I'm doing exactly the same thing you are, just a little bit bigger scale. I'm going to have 7 figures sitting in an account, a bank account, split up, of course, 250 maximums, but with no project in the pipeline to buy. 0. None. There's no other project out there that I'm looking at that I'm going to say that 7 figures I'm going to deploy right here. Nope, none. So it's going to cost me money, the burn rate, right? Well, Warren Buffett's doing the same thing. So Warren and I are together on this. Jamie Dimon's doing the same thing. We're together on this. They are stacking cash because they believe that the asset that they can buy, they're going to get a better deal on the asset that they're buying than what inflation is going to do, eating away at the cash that they have sitting there. So those guys make billions of dollars a year. And so for me, finding a way to make that make sense for my business is I cashed out at the perfect time because I got the highest values relative to being able to get a 4% 30-year fixed rate debt on these properties. 30-year fixed rate debt at 4%. It's already 4.25. And in fact, that program, that product that the bank has, they're like, yeah, it's actually 4.5 now. 0.5 percentage point on 9 properties, 30-year fixed rate debt. That's a massive move. I think that all the properties added up might be, I don't know, $4 million maybe on those 9. Yeah, probably 4, probably right around 4. And so what does that 0.5 point cost me? It's a lot of money every single month. So that's what I would tell you is it's still a good thing. Worst case is you can take that 70, you can pay it back down if you can't find the right deal and you don't want to keep on burning it. But having cash available to do the next deal and to do a great deal is really important. So I think you'll be good. I think you'll be good. Chester Williams, north of Moco, right? Yep. I said, okay, yep. Had to go look at a duplex here in Wickenburg. Very rare. Oh, cool. So I love multifamilies, 2s, 3s, and 4s that are in markets that don't really have them. I think those are awesome because then it's like, then you have to just understand from the appraiser that he might go nuts trying to comp it. All right. We're almost wrapped up here. My question was super simplified and I'm not completely new, but worried about how long it will take to find a good deal in this current environment. Yeah, it could take some time for sure. I think you just need to look, I think you just need to be patient. And again, I mean, Mike and I are giving it literally 2 years. I'm giving it 2 years. If I don't find anything good and my cash flow is still crazy coming in and increased nuts and margins and all that other good stuff, right? Then I might consider just taking that in and then just paying off a couple. You know, I might do that. I doubt it though. I'm sure I'll find something worth doing that gives me a better return than paying down an asset. Tom Kine and those guys. Yep. Crimson Knight, 2,500 a year in taxes in Dover. Man, hopefully it doesn't get reassessed. Shh, Crimson Knight. Shh. You think I'm going to call the assessor's office and complain? They're porking me on a bunch of other properties. Certainly not calling them on that one. Let's see. Hopefully, yeah. Tom, Crimson. Yeah, thanks for answering all my questions. Got to go now. Yeah, no worries. Happy to do so, Crimson. Chester Northeast. Don't get my market. Chester Williams. Chester and Tom. Okay, cool. Good. You guys are connected. Good. I love that. Chris Miller. I did, brother. Okay, saw the reply. Yep, cool. Have a great Sunday. You too. You guys enjoy the Super Bowl. Tom Kine, 40% is worth the drive. Yeah, 40% cash on cash. That's insane. Yeah, exactly. Yeah, take a peek. Take a peek. Yep. I have to check out those kind of yields. Yeah. Yep. Yeah. So they're talking about their market kind of back and forth. I mean, again, I've got 20, 30s, and 40s in my portfolio. I've got some that are in the teens, but mostly 20, 30s, and 40s. And one of the 40s I picked up this year. The numbers are they were just nuts. They were just absolutely nuts. And because it was in the 40s, I was willing to take the 5-year ARM that I could get, or the 5-year commercial debt that I could get. That's why I did it, was because the numbers were just so crazy. Because literally I can pay that mortgage down hundreds of thousands of dollars in the next 5 years. And that's probably one of the areas that I'll spend cash, because that building makes, right. So I bought it, it made 13. I'm already making just under 15. And I have a plan to get me to 18,000 a month. Biggest property I own. And so, yeah, I bought it. It was at 13,000 a month. I brought it to 15, and I can see 16. So in the next 6 months, and I can see 18 sometime next year. After I finish the upgrades. And so, yeah, then at that point, that building, I mean, a cost basis of $7,000 a month, that building will make $18,000 a month. So it will return $11,000 a month just on that 112 unit. So yeah, pretty cool. Is a 40% yield property Lambo house? It's not. Is it? It's one. That's actually another 40. That one's another one that's 40%. 38, I think. Yeah, the one I just referenced. No, that's a different one. No, because that was a big investment. Like what I had to put for a down payment on that property, I could have just bought the Lambo for cash. But see, that's the mistake that people make. They buy that Lambo for cash. It doesn't give them any return on capital. I buy the house and I have enough to pay for 4 Lamborghinis or 3 Lamborghini monthly car payments. And I own the asset. That's where real estate gets really fun, So yeah, no, I have the Lamborghini house is 2 duplexes on the same lot of land that are now rented out for 43, 53, 63, $6,300 a month is my current rent on them. $6,300 a month is my current rent, and my monthly nut all in on that one is $2,100. So it's got about $4,000 a month worth of income. Yes. Yeah, Legacy Op was impressive that the Bengals did to the Chiefs. I agree. I think they will pull it off. I don't think they will, because I think the Chiefs defense sucks. And I think that Joe Burrow has no idea what a full face of Aaron Donald and Von Miller is going to be. I like the Chiefs. I think the Chiefs are by far probably one of the coolest and best offenses the NFL has ever seen consistently. Their defense sucks. Got Jay Markey, got to jump off here. Thank you so much for doing this week and the Instagram content too. Jay Markey, you're very welcome. Chester Williams, Cassie Ironman. I looked all last year and I'm still sitting on dry powder. Yep. Yep. Yeah. Keep on doing it. Chester, I answered the Lambo house question. Chester Williams, the one you referenced. Yep. So Matt Bittner, do you think we will see any meaningful increase in foreclosures anytime soon? It's going to be a trickle. It's not going to be, remember when all these idiot crash guys were talking about, millions of foreclosures? It's going to be a trickle. It's going to be a trickle. Yep. It's going to be a trickle. Oops. Here. I need to go here. Yeah. It's going to be a trickle. So I'm already seeing some more, but they're nothing really of quality. It's going to be a trickle. You'll see them, but it's going to be a trickle. Yep. REI trainer, hopped on late. Did you get your Lamborghini and license plate? No. So I can't get my license plate until I get the Lamborghini. And I'm literally just waiting. Same thing as for deals. I'm just waiting. Being patient. I'm just waiting. Yep. I want to buy it. I want to buy the Lamborghini from the guy who just got crushed in the market. The market's down, or crypto. Market's down 30, 40%, and he's got to get rid of his car. That's the Lamborghini I'm looking for. I want to buy a distressed asset. That's what I'm looking for. So the property's still making the money, still going and sitting in the bank account. And yeah, that property makes a little over $4,000 a month on a double duplex. It's pretty cool. It was a phenomenal deal. Dion, talk financial freedom. Have a full week of awesome. Thanks, Dion. You too, buddy. I'll see you Thursday. Tom Kind, how are you, Dion? Yep. Dakota, my new dream car is the Mustang 1000. I haven't seen that yet, but I'll look it up. Cassidy Ironman, looking at using a CPA for the first time this year. $1,000 seems reasonable. That's the quote I got from 2 places. Yeah, that's fair. Yeah, it's well worth it. They'll save you more than that $1,000 over you doing it yourself. Yep. My return last year was a little over 3,000. It was like $3,500. Yeah, I don't think that's a bad number. I think that's fair. Yeah. Yep. Marachia Nienhauser. Yep. Thanks again, Matt. You always deliver wonderful information to us. Also, the pronunciation of my name, the pronunciation of my name last week was correct. Crap. Now I hope I said it right again. Put it in there. So Marachia Nienhauser. Let me know if I said that right, because now it's going to bother me. Please. Chester Williams, could you imagine the Chiefs offense with the Rams defense? Yeah, holy crap. That'd be awesome. Like the Chiefs offense is really, really good. It's real. I mean, like I've gambled on a lot of football over the years. That's an amazing, I mean, everything. They get you every way they can. Like, yeah. And they were also a little nicked up, but yeah, that defense for the Rams, man, especially having gotten Jalen Ramsey, whew, like he was the game changer, right? Because he can cover anybody for 5 seconds. And that was the problem that they were always worried about was you can get Donald. And then when you added Von Miller going up to the middle, I mean, the Rams did it all right. Beckham going there, Jalen Ramsey going there, them overpaying for him was the right thing. Von Miller going there. I mean, the Rams put together a run for that team and they saw the opportunity and they took it. And yeah, I'm not rooting for the Rams by any stretch. But yeah, I think they're the ones that win today. I don't care if I'm wrong or right. I didn't put any money on the game. But yeah, I think that Rams defense I think Aaron Donald's something special. Real estate is a slower moving asset compared to stocks and crypto. Yes, exactly. Yeah, that's why I'm going to buy that Lamborghini from a guy who's not invested in real estate because he's got cash flow still. So I'm going to buy it from somebody in stocks and crypto because that market's going to adjust, even if just PEs, rationalize, and you're not getting, 21 times earnings or 23 times earnings or 19 times earnings. Even if just a stock gets, crushed on price to earnings and it goes to 15, you're going to lose a ton of value there. And if they're margin, then they're going to have to cover margin. I mean, it's just what I saw before in the .com bubble. I lived through that. It's what we saw before in the 07, 08, in the 08 crash. Same thing that we saw then. And so I remember what it was like. I was buying assets then too. Houses as many as I could, but I couldn't buy as many then. But yeah, for me, that will be then get a car loan on it, even if I pay a high rate. But that high rate will be covered by the profit that I'm making from a property that I bought that I call the Lamborghini house. So I don't disagree. So everyone, thank you very much for spending some time with me on Sunday and hanging out with me. I'm going to go hang out with my kids and my wife and spend some time hanging out with family on Sunday. So appreciate you guys, my second family. And if you guys need anything, you see me on the boards throughout the course of the week. You'll also see, I'll be on with Mike on Tuesday, with Dion on Thursday on Bigger Pockets, not Bigger Pockets, on Three Amigos, not Bigger Pockets. They won't have me on. I filled out the form twice saying, hey, I'd love to be on, help you guys out, answer any questions, whatever, give you some perspective. Not interested. That's all right. Not everybody can take a lumberjack. And then Thursday night, I should have videos from a very special guest, one that I love talking to him. He's really super smart. And he's just a good dude. So like spending out and hanging out with him. So yeah, he took first. All right. Congratulations, Jennifer. She's trying to go for that college scholarship. I know we had friends with kids in wrestling and they were just like, it's all about that college scholarship. Got to get that college scholarship. So hopefully he gets that. So Chester Williams, thank you again, Matt. Always a pleasure hanging out and learning from a real RE from an expert. Oh, you guys are welcome. Appreciate it. All I can give you is my experiences and hopefully they help. So guys, have an awesome rest of your week. I appreciate your time. And you'll see me through the course of the week. And then Thursday, Mr. and Mrs. Lumberjack will be doing that again. And we'll have a couple topics that night too. Take care, guys. Bye, guys.